Hey folks, welcome you all to a new video. This is CA Ganesh Bharadwaj. So, in this video, we are going to discuss all the case study based MCQs appearing in your RTP revision test paper and the two mock test papers, right? So, of your CA Inter May 2024 attempt, right? And we are going to do this discussion relating to paper 4 cost and management accounting. Now, before we get started, let me make one thing very clear. Guys, this is a must watch video, right? Even if you happen to come across this video the day before your exam or the day morning of your exam, it's fine. Still, please do watch this video fully. So let me make it as concise as possible, but be very clear. The quality of questions appearing in your MCQ questions, the case study based MCQ questions appearing in these three sources are extraordinary, right? So if you don't do the RTP, MTP1 and MTP2, especially with respect to the case study based MCQs, you are literally on a suicide mission. So please do this before you enter into the exam hall for sure, right? I'm not saying watch this video for sure and not. At least do RTP, MTP1 and MTP2, right? Now here I'm going to break complicated things into much easier and very presentable manner so that it will be easy for you to understand as well. Clear with this, guys, right? So now without any further delay, let us get started. Now first let's get into the RTP for May 2024 attempt, right? So by the way, guys, this discussion is about the case study based MCQ component, the 30-mark component, right? That case study based MCQ component appearing in your RTP and the two MTPs. Now, first, I'm taking the RTP of May 2024 attempt, right? So first, case scenario, question number 1. This question is coming from material cost. Extraordinary question. Mark this question as important. Extraordinary question because they have tested certain unique aspects in this particular question, not just what we have learned conceptually, that is there. Apart from that, they have twisted this question a bit. So I would rather call this a very unique problem, one of a kind problem. No, honestly, I have never seen this kind of problem at the intermediate level in any of ICAI's publication till date, not just last 1 or 2 years. Till date, this kind of problem I have not seen. Now, nothing new as such in terms of concepts, but there are certain small aspects that they have kept a beautiful twist in, right? So let us get started with this question number 1. Now, the Purchase Committee of A Limited has been entrusted to review the material procurement policy of the company. The Chief Marketing Manager has appraised the committee that the company at present produces a single product X by using two raw materials A and B in the ratio of 3:2. So what they are saying, their FG is what? X. This X is produced by consuming two raw materials, raw material A and raw material B, and that too they have given the proportion 3:2. Are you clear with this? So whatever is the total raw material consumed, that will be in the proportion of 3:2 between A and B. Clear with this? Material A is perishable in nature and has to be used within 10 days from the GRN date. Now this is where the question becomes interesting, right? So what they are saying, A is a perishable commodity. Perishable means what? It has a very small shelf life. Let us say, for example, milk, right? Milk and all. Now here they are not talking about milk, but I'm just saying milk has a shelf life of just 2 or 3 days. Clear with this? Tomatoes, right? They have a shelf life of about a week or so on. Clear with this? So material A, irrespective of whatever it is, by nature, it needs to be used within 10 days from the GRN. GRN means what? Good received note. That is 10 days from the date of receipt. Or it needs to be necessarily used. Even if you buy and keep beyond that, it has to be scrapped off. It will become obsolete. It will not be, you cannot use it. Otherwise, the material becomes obsolete. Material B is durable in nature and can be used even after 1 year. Clear with this, guys, right? Now, material A is purchased from a local market within 1 or 2 days of placing an order. So if I place an order for material A, I will generally get it within 1 or 2 days max. Material B, on the other hand, is purchased from a neighboring state and it generally takes 2 to 4 days to receive material in the store. Clear with this? This is the ordering period, the lead time has been given. The purchase price per kilogram of raw material A and B is rupees 30 and rupees 44 respectively. So they have clearly given the purchase price of raw material A is 30, the purchase price of raw material B is going to be 44. Clear with this, guys? Exclusive of taxes. To place an order, the company has to incur an admin cost of 1200 rupees. The ordering cost per order is 1200. Whether I place an order for A or I place an order for B, per order the cost is 1200. The carrying cost for material A and B is 15% and 5% respectively. So 15% is the carrying cost for raw material A and 5% is the carrying cost for raw material B. Clear with this, guys? So why for raw material A it's slightly higher? They said it's perishable item. Maybe it requires refrigeration and also the storage cost is slightly high. Clear with this, guys? Right, then at present material A is purchased in a lot of 15,000 kg to avail a 10% discount on the market price. Presently what they are doing, so they are purchasing material A in lots of 15,000 kgs in order to get a discount of 10%. GST applicable for both the materials is 18% and the input tax credit is availed. Stop here. What they are saying, so they are paying this for 30 rupees, 44 rupees. Apart from that, they are paying GST, but wait, ITC is available, which means what? First of all, this is not even a part of your material cost because ITC is available. Are you clear with this? So clearly, this will not be considered in any of our calculations of material cost and all that. Have this thing very clear in your mind. Fine. Then the sales department has provided an estimate that the company could sell 30,000 kgs in the month of Jan 2024 and also projected the same trend for the entire year. Now, what they are saying? There is a sales department. They are saying the company can produce and sell how many kgs of FG product X. 30,000 kgs of product X can be sold for the month of Jan, and similarly that is how it will be for all the other months of the year, which means every month generally 30,000 kgs of my FG will be sold, right? That is the requirement of FG. Clear with this? Now, the ratio of input and output is 5:3. What is the meaning of this, guys? What is the meaning of this? Now, again, many students find it difficult to understand this. Input-output ratio means what? Means what? If I input 5 kgs, right, I will effectively get an output of 3 kgs. Are you clear with this? This is the meaning. So only if I input 5 kgs of my raw material, I will get an effective 3 kgs of my FG. Clear with this, guys? Clear with this, guys? This is the understanding. Are you clear with this? Sir, 5 kgs of what, sir? Raw material A or B, both put together. Are you clear with this? That is this total input is in the ratio of 3:2. Are you clear with this? This is the meaning. First, input output ratio means what? 5:3 means if I input 5 kgs of total input, effectively I will get an output of 3 kgs. This is the meaning. Logically understand. The company works for 25 days in a month and the production is carried on evenly. The following queries or calculations to be kept ready for purchase committee's reference, right? So now the purchase committee is going to call you, right, for some meeting. They are asking you to keep all these things, calculations ready. First, for the month of Jan 2024, what would be the quantity of materials to be requisitioned for both A and B? Requisitioned means what? Requested. So material requisition note. Who will prepare this? Who will prepare this? The production team will prepare or request for raw material from whom? From the stores manager. Correct? From the stores manager. Or in other words, requisitioned means what? Consumed. So they are basically asking you what is the raw material requirement, raw material consumption of raw material A and raw material B for this month of Jan 2024. Are you clear with this? Right? So now tell me, guys, what is it? 2 marks, 2 marks. Right? Now, how will you calculate this? Now, we know that I need to sell 30,000 kgs of my output, right? There are no opening and closing stock of FG, which means what? I need to produce 30,000 kgs of my output. Correct? So I need to produce 30,000 kgs of output. I know that. And they have given the input output ratio. Only if I input 5 kgs, I will get 3 kgs effectively as output. So if I want to get 30,000 kgs as output, how many kgs should be inputted? Right? It is going to be 30,000 divided by 3 into 5. Are you clear with this? Look at this. So now the monthly production of X is going to be 30,000. Correct, guys? The monthly production of X is going to be 30,000. So the total raw material required is 30,000 divided by 3 into 5. I need a total of 50,000 kgs of raw material. Yes, A or B, A and B put together. Now the raw material A and B will be in the ratio of 3:2. Are you clear with this? Right? So it will be the ratio of 3:2. So 50,000 into 3 by 5. So I need 30,000 kgs of raw material A, 50,000 into 2 by 5, I need 20,000 kgs of raw material B. Are you clear with this, guys? So here 30,000 and 20,000, this is the answer. So which is your, yes. So the first one, the answer is D. I need, so the total raw materials required is going to be 30,000 kgs of A and 20,000 kgs of B. 2 marks and done. Clear with this, guys? That's about it. Right, next. The EOQ for both raw materials A and B. So what is the EOQ formula? Root of 2AO divided by C. Correct, guys? Root of 2AO by C. Right? So now, how do you compute this? How do you compute this? So now, for raw material A, so it's going to be root of 2 into weight. A is annual consumption. This 30,000 is only monthly consumption. 30,000 into 12. This becomes your annual consumption. Root of 2 into A. What is O? Ordering cost per order. 1200 rupees in divided by C. What is the carrying cost per unit per annum? They have given in the question with respect to raw material A, the carrying cost is 15%. So 15% on its purchase cost, 15% into 30. Are you clear with this? If you calculate, you are getting an EOQ of 13,856 kgs. This is for A. Similarly for B, what is it? 2 into, so the annual consumption is going to be 20,000 into 12, right, into 1200 divided by, here the carrying cost for B is going to be 5% on its purchase value, 5% on 44, you get 16,181 kgs. Are you clear with this, guys? Right? So the answer, which is the right option here, now you can just go and tick in the option. So here it's going to be option A, 13,856 kgs of A and 16,181 kgs of B. Are you clear with this, guys? Now before that, let me tell you one more thing. Sir, should I do all these calculations? Should I present them? No. All these things you can do it in a rough work, right? You can even scribble and you can do it, no problem. This has been given so that you will be able to understand the logic behind the answers. Are you clear with this? These need not be presented in the exam, only the right option, A, B, C, whatever is this. So here, if this question has been asked, you just need to say the answer is A. That's all. How you worked, that is not required. That's what MCQ stands for, multiple choice questions. The workings and all are not required, no step marks. You either get 2 marks or you get 0. That's why I'm saying it's a double-edged sword. If you get it all. It's like hit out or get out. It's something like that. Are you clear with this? Be very, very careful when you're doing it. Fine, guys. Now comes the tricky part. What would be the maximum stock level for raw material A? What would be the maximum stock level for raw material A they have asked for? Now, guys, now we know the formula for calculating the maximum stock level. What is the formula? We have seen this reorder level. Recall that mother kitchen example I told you, that rice drum example. Visualize it, automatically you'll get the formula. Reorder level, right, minus minimum consumption into minimum lead time plus reorder quantity. Correct? Reorder quantity is going to be your EOQ. Right, guys? Fine. This is what it is. Generally, whatever you get here, this is what is the maximum stock level. Yes, but wait. Yes, this is fine. You can do it, but wait. Now, in this question, they have mentioned material A is perishable in nature and it has to be used within a period of 10 days. Are you clear with this? So, no matter what, my stock level, any stock level should not exceed beyond my 10 days worth of consumption. So, let us say my maximum stock is something else. Even no matter what it is, in this case, they have said the stock anyways, it needs to be used within a span of 10 days. If I hold it beyond 10 days, it is obsolete. It will be waste. So no matter what this formula says, based on the formula, no matter what is the quantity I arrive, it should not be exceeding 10 days equivalent of consumption. Now you tell me guys, per day how much I consume. So raw material A, we saw that, one second, yes, raw material A, look at this, we saw that in a month I consume a total of 30,000 kgs of raw material A, correct guys? In a month I consume 30,000 kgs of raw material A. In a month there are 25 working days, right? So 30,000 divided by 25 into 10, so which means maximum, whatever is the maximum stock, you calculate using the formula, but it should be restricted to 12,000 kgs. It cannot go beyond 12,000 kgs. Suppose by using this particular formula, I arrive at the maximum stock level as, let us say, 15,000 kgs. Just example, we will see whether it's 15,000 or not, right? Now, despite 15,000 is, as per the formula we are arriving, in this case, I should not hold beyond 12,000 kgs. Why? Because if I hold beyond the 12,000 kgs, whatever I'm holding in excess of 12,000 is anyways going to be obsolete. So now why would I do that? So this is going to be a restriction that I'm going to pose here, because in this question they have given that it's a perishable commodity. Are you clear with this, guys? This has never been, you cannot find this sum anywhere in the study material also, right? Even in the past exam questions, it was not there. For the first time ever, the RTP it has come. This is the reason why I told you, right? This is very, very important. Do RTP and the mock test papers. Without that, don't enter your exam. Clear with this, guys, right? Now, this is what they have mentioned here. The calculation of maximum stock level. Since material A is perishable in nature and it is required to be used within 10 days, the maximum stock level shall be lower of 10 days equivalent consumption and whatever you calculate as per your formula. Are you clear with this, guys? Are you clear with this? So all these things in the back end you need to do, and finally you need to arrive at the answer. Now guys, what is the formula that I told you? So it's going to be reorder level minus minimum consumption, minimum lead time, plus reorder quantity, right? This is the sequencing, they have just changed it. That is not a problem. Clear with this, guys? Now, reorder quantity is how much? EOQ, we just calculated the EOQ of raw material A is going to be 15,000, right? We got this. Now, reorder level, how will you calculate maximum consumption into maximum lead time? Now guys, in this case, have they given any maximum consumption? No maximum consumption, maximum consumption per day, minimum consumption per day, average consumption per day, nothing is given. They have said that generally I consume how much? Generally I consume 30,000 kgs of raw material A, right? In a month, we have calculated that, and one word they have given towards the end. What is it? So the production is carried out evenly. So in this case, what it means is there is no maximum, minimum, average. Generally there is certainty with respect to the consumption. Are you clear with this? This is the understanding that you need to take. So generally what we have is, we have maximum consumption per day, average consumption per day, minimum consumption per day, correct? In this case, what happens? Nothing of that sort is there. There is only one consumption, certain consumption. They are very certain about how many kgs will be consumed in a day. How many kgs will be consumed in a day? In a month, I consume a total of 30,000 kgs of raw material A. So 30,000 is for 25 days. In a day, how much am I going to consume? 1200 kgs. Are you clear with this, guys? Are you clear with this? So in this case, this is what it is going to be. So here, look at this. So here, the maximum consumption is going to be what? Whether it is maximum consumption, minimum consumption, average consumption, whatever it is, in this case, the consumption is only one figure. What is it? It is going to be 30,000 kgs is what I consume in a span of 25 days. So per day, I consume how much? 1200 kgs. Are you clear with this, guys? So they have just taken 30,000 divided by 25. This is nothing but 1200. Clear with this, guys? Into maximum lead time. What is the maximum lead time? It's given in the question here that generally raw material A, how long it takes? Raw material A, how long it takes? They have just given it. Yes. Within 1 or 2 days. Minimum is 1, maximum is 2. This is what? Lead time. So for raw material A, lead time, minimum is 1, maximum is 2. Are you clear with this? If you want to calculate average, So minimum plus maximum by 2, average is 1.5 days. We are talking about lead time. Whereas with respect to consumption, there is no minimum, maximum and average in this question. The consumption per day is always 1200 kgs. Are you clear with this? This understanding you need to have. Are you clear with this, guys? So in this case, so what happened? Lead time, if you see for raw material A, right? So minimum is going to be 1 day, maximum is going to be 2 days, and average is going to be 1.5 days. Are you clear with this? Have these figures with you, you will get it. Now, what's your reorder level? Maximum consumption, maximum lead time. So maximum consumption, whatever it is, consumption 1200, maximum lead time 2 days. 1200 into 2, 2400 kgs is my reorder level. The moment my stock hits 2400, I'm just going to place an order for this, right? Now, what is going to be my maximum stock level? My maximum stock level is going to be reorder level. Reorder level. Okay, fine. So reorder quantity, that is 15,000 kgs plus reorder level. So that's going to be how much? We just calculated 2400 kgs minus of minimum consumption into minimum lead time. Minimum consumption is how much? That is 1200 only, right? Consumption is 1200. Minimum lead time is 1. So look at this. 30,000 divided by 25, which is 1200 into 1. They have arrived at it. Are you clear with this? So this is nothing but 1200. So 15,000 plus 2400, right, minus 1200, you get how much? 16,200. As per the formula, they are saying the maximum stock level will be 16,200. But wait, this is a perishable commodity. Now, no matter what, your stock level cannot exceed 12,000 kgs. Are you clear with this? Because in this case, I can't hold beyond 10 days of my stock. Are you clear with this, guys? So now what has happened? The stock required for 10 days consumption, right, the restriction is lower than the maximum stock level calculated through the formula. Therefore, the maximum stock level will be how much? 12,000 kgs. Are you clear with this, guys? Are you clear with this? So hence, it is going to be how much? The right answer is going to be here. The right answer is 12,000 kgs. Are you clear with this? Now, look at this. Using the formula, you arrived how much? 16,200. That is also given as one of the options. Look, this is where things become very tricky. Now, what you will do is, you will just put the formula, and based on that, you will arrive at 16,200, and you will come out of the exam hall thinking that you've done a right answer. Look at what has happened. Look at what has happened. There is one last minute twist that institute has kept in this case. That's why they didn't ask anything about raw material B. They only are asking about raw material A. Are you clear with this, guys? So it is going to be 1200. 2 marks or 0 marks. Now, sir, it takes so much time. No, here I'm explaining, so it takes a lot of time, right? If you have this in your mind when you are doing, all these steps need not be done. You just need to work it on a rough. It's okay. That's all, because these steps are not required. You just need to write the exact correct answer and leave it there. That's about it. Execution will not take time. Processing and the back end working is all that takes time. That's the reason why they're giving 2 marks. Institute will not just lift and give 2 marks just like that. They want you to do some, back working to arrive at the right answer and get the marks. Clear with this, guys? Every single mark here has to be earned. Right, guys? Now let's go for the 4th one. Now, excellent part. This 4th part is excellent. Brilliant part. Now let me tell you what it is. Calculate the savings or loss in purchase of raw material A if the purchase order quantity is equal to EOQ, right? So savings or loss in purchase of raw material A if the purchase order quantity is equal to EOQ. Now, what are they saying? Presently, material A, every time they place an order, for how many kgs do they place an order? 15,000 kgs. Correct, guys? Now, guys, patiently listen. This is nowhere close to, what is being given in the institute study material or things like that. For the first time ever, they have coined this sum, I guess, right? Some people have, some of the best brains are behind this sum. So please be very, very careful. Please hear me out patiently. Even if you look at the answer, you might not understand fully. That's the reason I'm telling you. Please listen, hear me out carefully. Now, what they are saying here, calculate the savings or loss in the purchase of raw material A if the purchase order quantity is equal to EOQ. Now, Presently, every time they place an order, raw material A, they place an order for how many kgs? They place an order for, they are purchased in lots of 15,000 kgs. If they purchase this, what additional thing that they get? They get a discount of 10%, right? Now they are asking, suppose instead of placing an order for 15,000 kgs, if I place an order for what? For my EOQ level kgs. EOQ level kgs is how much? Raw material A. What is the EOQ? Raw material A, the EOQ is 13,856. They are asking 13,856 kgs, right? So now what they are asking is, if I place an order, if my order quantity is equal to my EOQ level, right, as compared to my current policy, will there be a savings in cost or will there be an extra cost incurred? This is what they are asking. This is what they are asking. Now guys, a very brilliant sum here. Let me tell you what. Now look at this. Look at the solution given here. This is what they have given. Calculation of savings or loss in raw material A if the purchase quantity is equal to EOQ. Presently what they are doing, their purchase quantity, every time they place an order for 15,000 kgs. Now if I follow EOQ, now I will be placing an order for how many kgs? 13,856 kgs. Now tell me guys, in both the case, what will be the total annual consumption? Monthly I consume 30,000 kgs into 12. So in a year I consume 3,60,000 kgs, 3,60,000 kgs. Are you clear with this? Right. Now wait. Here comes the most interesting part. Please hear me out carefully. Please hear me out carefully. Now what happens here? Now guys, we all know that material A is a perishable item, or in other words, now 10 days equivalent consumption is how much? 12,000 kgs. Max at a given point of time, I should not be holding 12,000 kgs. If I hold beyond 12,000 kgs, which means whatever I have purchased in excess of 12,000 kgs can be utilized only after 10 days, which means basically I need to throw it away. I need to scrap it. Even though I have purchased it, I need to scrap it. Correct? This is the meaning of that. Are you clear with this? Are you clear with this? Now, if I go with the present policy of purchasing 15,000 kgs at a time, now what happens? Though I purchase 15,000 kgs every time, I will be utilizing only 12,000 kgs would be available for consumption. Every time I place an order, I will place an order for 15,000 kgs, but 3,000 kgs I will purchase and I will scrap it off. Are you clear with this? Are you clear with this? Sir, then why will I do this, sir? Am I an idiot to do? No, it's not like that, because this guy is willing to give me a discount of 10% only if I purchase 15,000 kgs at a time. Are you clear with this? So we need to evaluate the two, the two scenarios here. First, are you clear with the understanding here? This material A is a perishable commodity, which means at a time if I purchase and keep, I should not stock beyond 12,000 kgs at a time. So beyond 12,000 kgs, if I purchase and keep, whatever I have purchased in excess of 12,000 will have to be scrapped off. Scrapped off means it has to be obsolete. It needs to be thrown out. It's a waste for me. Clear with this, guys, right? So though I purchase 15,000 kgs and keep every time, what happens is what? 3,000 kgs are being scrapped and only 12,000 kgs are available for consumption. Are you clear with this? So which means in a year, how many number of orders need to be placed? Sir, 15,000 I purchased, but out of this purchase, only 12,000 is available for consumption. So from a consumption viewpoint, from a single lot, I am able to take only effectively 12,000 kgs. Right? In a year, I need 3,60,000 kgs, but out of every lot, I am effectively able to use only 12,000 kgs. So 3,60,000 divided by 12,000. In a year, I need to place 30 orders. Are you clear with this? Now, if my EOQ level, if my order quantity is going to be 13,856, same is the case. Any quantity I purchase over and above 12,000 kgs needs to be scrapped off. It will become obsolete. It's going to be a waste for me, right? So in this scenario also, out of every order, what happens? Effectively, only 12,000 kgs are available for consumption. So even if I keep my order quantity as 13,856, how many number of orders I need to place in a year? 3,60,000 is the consumption required, divided by the number of kgs that are available for consumption per order. Here also it is going to be 12,000 kgs. Are you clear with this? 3,60,000 divided by 12,000, right? You get 30 number of orders. Are you clear with this, guys? Now what we need to do here is, so if my order quantity is 50,000, I need to calculate what will be the total cost. Total cost means what? Basically, in this case, what happens? My ordering cost, right? My carrying cost, I need to calculate. Then purchase cost, I need to calculate. And apart from that, now every time I purchase and keep in excess of 12,000 kgs, I'm going to scrap that off, no? Right? So that also needs to be accounted. Loss due to obsolescence, that also needs to be taken into account. So the loss due to obsolescence, these four are the costs that are relevant for my comparison here. So in scenario 1, what will be the total cost? In scenario 2, what will be the total cost? This I need to compare. Are you clear with this, guys? Are you clear with this? Now, this is the most trickiest calculation of the entire RTP that I've seen. Right, in this entire RTP, this is the most trickiest calculation. Many students fall for this. Right, now what happens here? So now we got this 13 is the number of orders. So what is the ordering cost? Right, so per order the cost is 1200 into 30. So in the first situation, the ordering cost is 36,000. Second situation also, it's 1200 into 30, 36,000. Clear with this, guys? Carrying cost. What is carrying cost? So carrying cost is going to be calculated on what? It is going to be calculated. They have said for raw material A, it's always 15% is the carrying cost. So 15% into whatever is the purchase cost, you need to multiply on that into average inventory. Correct, guys? So now in this case, what happens? What is going to be my purchase cost? Now generally my purchase cost is 30 rupees, but if I purchase 15,000 kgs at a time, what happens is that guy is willing to give me a discount of 10%. So 30 minus 10% of 30. So 30 minus 3, 27 rupees is going to be my effective cost. Are you clear with this? And now every time I'm placing an order for how many kgs? 15,000 kgs. My average stock will be what? Half of 15,000, 7,500. So what will be the total carrying cost? 15% into 27 into 7,500. So my carrying cost is going to be 30,375. On the other hand, if I purchase in lots of 13,856, what happens to my carrying cost? Now, will the guy give me any discount? He will not give you any discount. So the carrying cost per unit per annum is going to be 15% into 30. Are you clear with this? Into average inventory. Average inventory is half of my order quantity. So 13,856 divided by 2. How much is that? 6,928. Are you clear with this? This is how you need to calculate. So now this component is also arrived at. Are you clear with this? Now, what will be the purchase cost for the good portion? Good portion means what? The goods which are properly used, consumed. Are you clear with this? Because anyways, the loss portion we are separately calculating it. Are you clear with this? Yes, very simple. So effectively, what is the good number of units consumed in a year? 3,60,000, right? And every unit is being purchased at the rate of 27 if I keep my order quantity as 15,000 kgs. Correct, guys? So 27 into 3,60,000 is going to be 97,20,000. Whereas on the other hand, if my order quantity is equal to my EOQ level, what happens? Here also, effectively, the good units consumed remains to be 3,60,000, but every unit is purchased at the rate of 30 rupees. The cost here is going to be 108 lakhs, or in other words, it's going to be 1 crore and 8 lakh. Are you clear with this, guys? Now comes the beautiful part, the loss due to obsolescence. Loss due to obsolescence. Very interesting calculation, logical also. Now, what is the total number of units lost here? If you see, what is the total number of orders placed? 30 orders, correct? And in every order, how much is in excess of 12,000 kgs? So here, if I order 15,000 kgs, 3,000 kgs per order will go waste. Are you clear with this? Or in a year, 3,000 kgs into 30, that will be the total number of quantity that I'm going to, that is going to become obsolete. So 30 orders into, in every order, 3,000 kgs will go waste, right? So this will be the total quantity that goes waste. and every kg is purchased at an effective cost of 27 rupees, because here I have a discount. Are you clear with this? This is the calculation for the purchase cost that I'm incurring in respect of units that become obsolescent. Are you clear? Obsolete. Are you clear with this? On the other hand, if my order quantity is 13,856, so in this case, how many kgs are in excess of 12,000? So it's going to be 1,856. Clear with this? Every time I place an order, 1,856 kgs will become waste, will go waste. So 1,856 kgs, right, into 30. This is the total number of kgs that I am actually losing out into the purchase cost of 30 rupees. This is going to be my total loss due to obsolescence in the second scenario. Now what you do is you just add up all these things. So now A plus B plus C plus D, all the four costs you add, all the four costs, that is ordering plus carrying plus purchase cost for the good units and the loss due to obsolescence. If you add all these things, right, if my order quantity is at present 15,000 kgs per order, right, my total cost is going to be 1 crore 22 lakh 16,375. On the other hand, if I am ordering at the EOQ level, my total cost is 1 crore 25 lakh 37,576. So now here, in this case, what happens? If I order at the EOQ level, my total cost is increasing. Are you clear with this? Sir, what, sir? Generally, it should not increase, no? So what we have done in our regular classes and all, is it wrong? No. Remember, I told you, there it is, EOQ formula, all these things are done without a discount model. If there is a discount, obviously you need to compare it scenario wise. Are you clear with this? There, purchase cost was never relevant for our decision making. Here, purchase cost is also relevant for our decision making, and over and above that, there is some obsolescence and all is given. This is a complete scenario based calculation. Are you clear with this? If all these if there is no discount and if there is no obsolescence and all, obviously at the EOQ level only it will give you the total relevant cost, but in this case it is not the scenario. Are you clear with this? That's why I said this question is very unique, right? So now what they are saying again, guys, till the last moment, till the last second, they have given, they have given more than, they just keep on giving a rider here. Now what happened is, so now you tell me what is going to happen. If I order at EOQ level, what will happen? If I order at EOQ level, what will happen? I am going to incur an extra cost to the extent of how much? 1 crore 25 lakh 37,576 minus 1 crore 22 lakh 16,375. If you subtract the two, what will happen? The difference is how much? 3 lakh 21,201. Now wait. Read the question here. What have they asked? Because here there are two figures. One is a profit, one is a loss. Are you clear with this? So you need to know what they are keeping as a base. Calculate the savings or loss in purchase of raw material A if the purchase order quantity is equal to EOQ. So if I am ordering at the EOQ level, I am incurring more cost, correct? Which means if your order quantity is equal to EOQ level, you will be incurring a loss of 3,21,201. The answer here is B. Till the last second, they are keeping a lot of riders. Please be very careful. So if you decide to fix your order quantity as equal to your EOQ, then your costs will increase to this extent, to the extent of 3,21,201. Increase in cost means what? It will result in reduction of profit. That is nothing but your loss. Are you clear with this, guys? Right? So the answer here is what? The answer here is B. That's why they have given the answer here is B. Are you clear with this, guys? Excellent sum. And the notes and all is given here. Since the material gets obsolete after 10 days, the quantity in excess of 10 days consumption, 12,000, are wasted. Hence, 12,000 kgs, after 12,000 kgs, a fresh order needs to be given. Carrying cost is incurred on the average stock of materials purchased. Clear with this? So, your carrying cost is incurred not just on the good units, even on the units that you're going to scrap, because you at least hold it for the next 10 days. Are you clear with this? That's why we calculated that on what? On the EOQ. Clear with this, guys? Then the excess quantity of materials become obsolete and the loss has to be incurred. They have just given notes so that you will understand this. See, all these things need not be mentioned in the exam. This is an MCQ question. It needs to be there here. This is the reason, I am explaining this in depth. Just look at this. We've spent the last 40 minutes just for this one sum. Now, please don't come to a conclusion that, okay, so case study based MCQs will take a lot of time. No, It is not the case. I am giving an explanation here. I need to explain. That's why it's taking a lot of time. Do not worry about it. Clear with this, guys. Clear with this. And please don't lose your confidence if you didn't get this. Look, this is entirely new. This is entirely new, a unique question. Don't think that, okay, so this is how costing is going to be, I'm going to skip and all. Don't come to that conclusion. This is a unique question. If this question comes in the exam as such, now that you have seen this video, you will be able to crack it. Think of it like that. Do not lose your confidence, guys. My humble request to you is, do not lose your confidence, because this is a very unique sum that we are doing. Clear with this. It's just, it requires some presence of mind. That's about it. Fine. And finally, what have they asked? What is the last part of the question? 1 second. Yes, what's the last part of the question? What would be the minimum stock level for material A? So what is the minimum stock level for material A? So how do you calculate the minimum stock? It's going to be reorder level minus average consumption into average lead time. Correct. This is the formula. Recall whatever we have done. So recall that. So reorder level minus average consumption to average lead time. So reorder level is nothing but, how do you calculate reorder level? Maximum consumption to maximum lead time. Correct, guys. Fine. So now reorder level. Anyways, we have calculated the reorder level before itself. Yes, reorder level we had calculated it as 2400 kgs. So reorder level here is 2400 kgs minus average consumption into average lead time. So consumption, how much is this? It's always 1200 kgs. Average lead time 1.5. So minus 1200 into 1.5. See, scoring this 2 mark is much easier. Whereas the previous part, we had to do a lot of workings. So now just look at this. It's going to be how much? It's going to be yes, minus of 1200 into 1.5. It's going to be how much? 600 kgs. So the answer is going to be 600 kgs. So it's going to be C, 600. Clear with this, guys? Now all the workings, all the explanation, it need not be given for MCQs. Please be very clear, right? It need not be given. You just need to select the right answer and put it there. That's about it. But here I'm talking about the thought process. How do you get it? This is what I'm giving you as a value addition. This need not be presented. So forget the presentation part for MCQs. For MCQs alone, I'm saying, clear with this. But you need to know how to crack these kind of questions. Clear with this, guys. And that is about question number 1. In my opinion, this is the topmost rated sum in the present RTP, because it requires twists and turns like anything. And this is a kind of question that I have not seen myself. I have not seen myself before in the history of institutes publication at the intermediate level. That is the level of standard that they are expecting. And this should not frighten you, guys. If you didn't know how to solve this sum, you are learning it right now. That's about it. Leave it there. Please do not extend this. Don't think that all the sums will be like this. 1 or 2 sums might be like this. And that is what we are, tackling here. Clear with this, guys? Fine. With this, let's move on to the next question. Now, let's move on to the second case study based MCQ in our RTP. Right? Now, guys, the board of J Limited has been appraised by the general manager HR that the employee attrition rate. Attrition is what? Churning. So clearly they're going to talk about labor turnover, right? And the company has increased. The following facts has been presented by the general manager HR. The training period of the new recruits is 50,000 hours. And during this period, the productivity is 60% of experienced workers. The time required by an experienced worker is 10 hours to produce 1 unit. Now, 20% the output during the training period was defective, and the cost of rectification of a defective unit was 25 rupees. The potential productive hours lost due to delay in recruitment was 1 lakh hours. The selling price is 180 rupees and PV ratio is 20%. The settlement cost of the workers leaving the organization was 183,480. Recruitment cost was 156,340. Training cost was 1,13,180. You being an associate finance to the general manager HR, has been asked the following questions. Now, guys, isn't this similar to the question that we've already covered in our regular batch? Right? There was one question regarding the profit foregone due to labor turnover, right? But in this question, certain additional data is also being given. That's about it. Predominantly, it's the same. If I remember right, the total contribution, the profit foregone was 4,62,000, something like that. I vaguely remember. See, this as actually a study material question, right? A descriptive question. They have converted it into what? Into a MCQ, case study based MCQ. Very good. 10 marks. You will see how easy and simple this question is. Now, question number 1 is out of the league. It's completely different. Question number 2 is literally nothing in front of question number 1. You will see this 10 marks. We will be finishing it off in the next 4 to 5 minutes. That's all it will take. Not even that much. Clear with this, guys, provided you have a very logical reasoning. Of course, we have done this question in the regular batch itself. This is a straightforward question. Now, what are they asking? Just answer whatever they are asking. First, how much quantity of output is lost due to labor turnover? Lost due to labor turnover. How much quantity? So now remember one thing. So first here, the training period of the recruits is 50,000 hours. And during this period, their productivity is 60%, right? So there is a drop in productivity. Because of that, some units there could be loss of some units, right? Then there is a potential productive hours lost. Because of that also, there could be loss in some units. We will have to calculate. Now, sir, this one, 20% of the output was defective, sir. That is not loss of output, because they have given this defective can be rectified at the rate of 25 rupees per unit. Clear with this, guys? So there are only 2 areas where you can find a loss in your output. One is due to a drop in the productivity. The other one is due to loss of productive hours. How will you calculate this? Now, first they have given 50,000 hours is the training period. Correct? Now, this 50,000 hours, instead of new recruits, had I given this to experienced staff, right? What is the unit? What is the output that they would have produced? Look at this. Output by experienced workers in 50,000 hours. Every unit, they will take 10 hours. So in 50,000 hours, they will be able to produce how many units? 5,000 units, right? But these guys, they have said that if I give it to the new recruits, they will be able to produce only 60% of it. That is, their productivity level is only 60% of it. So since I'm giving it to new recruits, only 60% of that could be achieved. So only 3,000 units could be achieved. So now, had I given it to experienced staff, I could have got 5,000 units. Since I've given it to them, I got only 3,000 units, which means the loss of output here is 2,000 units during the training period. Clear with this? That is number 1. Number 2, what? They have said that potential productive hours lost. This 1 lakh hours is lost because they had to conduct interviews and all these things. This time, if they had spent in actually doing the production, they would have produced so many units. How many units? 1 lakh divided by 10. 10,000 units could have been produced further, right? So that is what they have given here. Look at this. So delay in recruitment is how much? Due to delay in recruitment, how many units are lost? 1 lakh divided by 10. 10,000. Plus due to inexperience, drop in productivity, 2,000 units. Overall, if you see, 12,000 units are lost because of this labor turnover, attrition rate. Are you clear with this? That's all. So the answer is what? 12,000 units. So which is, yes, C. That's about it, guys. 2 marks. Happily enjoy. That's about it. No need to present all these things. You scribble it, it's okay. Clear with this. Presentation is not required. It is just the answer that matters. Clear with this, guys. Next. How much loss in the form of contribution the companies incurred due to labor turnover? Very simple. What is this? They have given the selling price 180. PV ratio is 20%. 180 into 0.2. So every unit would have given them a contribution of how much? 36 rupees. They have now lost 12,000 units. What is the contribution foregone? So it's going to be, so how much is it? 36 into 12,000, 4,32,000 rupees. That's about it. So now what is it right now? You get what? You get another 2 marks here. That's about it, guys. Another 2 marks. Take it. Enjoy. Clear with this, guys. Do not lose the confidence looking at the first question. Please do not lose confidence looking at the first question. Do this. See, obviously, if one question is difficult, it will be offset by another relatively easier question. Institute cannot fail everyone. Have that in your mind, right? In order to maintain certain standards, certain questions will be like that. Do not worry, right? Fine, guys. So now how much is this? This is going to be 4,32,000, right? So it's going to be option number A, 4,32,000. Next, what is the cost of repairing the defective units? Now, what have they given? Read this. Go on and read. 20% of the output during the training period was defective, and the defective cost, rectification cost, is 25. Now, you tell me, guys, this new recruits, what was their output? 3,000 units, correct? Now, out of that, 20% is generally defective. So 3,000 into 0.2, 600 units were defective. Each of these 600 units had to be rectified now at a cost of 25 rupees. How much is that, guys? That's going to be 15,000 rupees is the cost of repairing the defectives. Just go and take the right answer here. It's going to be B, 15,000. Another 2 marks. Enjoy. Clear with this. Have the confidence. It's as simple as that. Clear with this, guys. Next, calculate the profit lost by the company due to increased labor turnover. There what we saw, contribution alone lost. So what is the total profit lost because of labor turnover? The contribution lost plus that extra cost they are incurring, the settlement cost and all these things, recruitment, training, settlement cost, all these things, add it up. Look at this here. Loss of profit is loss of contribution, 432 that we already calculated, plus this particular cost of repairing defective. All these things are arising because I'm doing this. There is an attrition, there is a labor turnover here, right? Plus recruitment, plus training, plus settlement cost, all these things. The profit foregone is going to be 9 lakh rupees. Clear with this, guys? Do not forget this. This defective thing is there, that is newly added in this question. In our regular batch we did, that question didn't have this defective. Basically, the study material comprehensive, descriptive question. They have converted it into what? An case study based MCQ. With small change, they have also added this defective repair. Are you clear with this? That's about it, guys. Fine, it's going to be 9 lakh. So you have an option of 9 lakh here, right? So what's 9 lakh in option number D? Next, how much quantity of output is lost due to inexperience of the new worker? I think we already calculated. Why are they asking this? Inexperience of new worker. So if had I given it to an experienced worker, this 50,000 divided by 10, I would have got how many units? 5,000 units, but these guys are only 60% effective, productive. So it's going to be 3,000. 5 minus 3, it's going to be 2,000 units. That is going to be the thing, no? What is new here? 1 second. Yes, that is what they have asked. That's what they have given here. Okay, see, they are giving you extra marks for this. Anyways, we had this calculation of the first level itself. They said the total output lost. Now they are just asking you about how many units are lost because of that inexperience. Okay, fine. They are ready to give you marks for the same calculation. So let's happily take it off. Let's happily take it with both the hands. So had I given it to an experienced worker, he would have finished 50,000 units, but you guys only were able to finish 3,000 units. So the loss of output due to inexperience is going to be 2,000 units, and that is going to be option number C. Another 2 marks here. Clear with this, guys. 10 marks done and dusted. Now you tell me, guys, isn't it easy? Isn't it easy? As simple as that. Are you clear with this, guys? Right? So do not fall into the belief that no, the exam is going to be difficult and all. No, there are certain things that need to be taken care of, and that's all I'm telling you. Have the confidence. That's the most important thing for you to face the exam. Clear with this, guys? Clear with this, guys? Right? Fine. So that's about this particular numerical problem of 10 marks fully. Now let's go on to the next question. Now let's move on to the next question. Question number 3 in this RTP. It's related to overheads, absorption costing. So during half year ending interdepartmental review meeting of P Limited, the cost variance report was discussed and the performance of departments were assessed. The following figures were presented. For a period of first 6 months of the financial year, the following information were extracted from the books. The actual production overheads was 34,08,000. The above amount is inclusive of the following payments paid as per court order, 4,50,000. Previous year expense booked in the current year, 1,00,000. Paid to workers for strike period under an award, it's 4,20,000. Obsolete stores written off is 36,000. The production and sales data for the 6 months are as under. Production of FG, 1,10,000. WIP, work in progress, 50% complete in every aspect, 80,000 units, and the sale of FG is going to be 90,000 units, right? Clearly you get an idea what this is. This is an exact sum, again done by us in our regular lectures, but as a descriptive sum which they are asking right now as a MCQ. So what is this regarding? Under or over absorption, right? So the treatment, how do you treat your under or over absorption, all of that. So the machine hours worked during the period was 33,000 hours. At the preparation of the revenue budget, it was estimated that a total of 50,40,000 would be required for the budgeted machine hours of 6,000 as production overheads for the entire year. So what they have given, So budgeted production overage is 50,40,000 and the budgeted hours is going to be 6,000 hours. During the year, a data analytic report revealed that 40% of the under or over absorption was due to defective production policies and the balance was attributable to increase in cost. So now what do you need to do, right? Arrive at the under or over absorption, and then now out of that 40% is due to defective production policies, which means treat it as a period cost, taking to costed P&L. The remaining 60% is your due to price level changes, so which should be treated as normal reasons, treated as a product cost. Using supplementary rate, you should charge it between 3 items. What are the 3 items? Unit produced, so your units sold, units unsold, and your closing WIP and all, right? We have covered this in depth, and this is exactly what they're asking. A very simple sum, 10 marks in your pocket directly if you're being very careful. Now, look at this. You were also present at the meeting. The chairperson of the meeting has asked you to be ready with the following for the performance appraisal of the departmental heads. Number 1, how much was the budgeted machine hour rate used to recover overheads? Now, this is too much for a 2-mark question. Very, very, very simple. What's your predetermined rate here? Guys, it's going to be 50,40,000 divided by 6,000. Budgeted overheads divided by what? Divided by the budgeted machine hours. Correct, guys? Look at this. 50,40,000 divided by 6,000. You get what? 840 rupees per hour. Clear with this, guys? So where is 840 here? 840 is option number D, and that's about it. Clear with this. 2 marks. Enjoy. Next. How much amount of production overheads has been recovered or absorbed up to the end of half year end? Now, guys, very simple. So how do you do? You know how overheads are being absorbed? Predetermined rate into actual base quantity consumed. Your predetermined rate is 840 into how many hours were actually consumed during the first half of the year. The machine hours worked, right? Actual hours is going to be 3,000. So it's going to be 3,000 into 840. How much is this? 25,20,000. So it's going to be 25,20,000. Option number A. It's a no-brainer. Another 2 mark here. Look at this. That's about it. Option A, which is 25,20,000. That's about it, guys. Nothing great. You just keep on marching forward. That's about it. Next, let's move forward. Next, what is the amount of overhead under or over absorbed, right? So now how will you calculate the under or over absorbed? So first you take whatever is the overheads actually incurred. So 34,08,000. From that, subtract all these extraordinary or abnormal items. You will get the net. Overheads actually incurred. Compare that with overheads absorbed that we just calculated right now. What was the overheads absorbed? 25,20,000. You'll get the under or over absorption. Done with this. Look at this. That is what they have also done. So the total production overheads actually incurred is 34,08,000. From that, subtract the 4 extraordinary items. That is amount paid to worker as per court order, right? Prior period items booked right now, and your wages paid for the strike period under an award. Award means what? The court has given you and asked you a direction to give it as an award to the workers. Obsolete stores written off. These are some ideally your abnormal items. It shouldn't have formed part of your overheads. It should have been directly taken to the costing P&L. So anyways, we are just reducing it. So technically speaking, my overheads incurred is 24,02,000 rupees, right? But how much was absorbed? 25,02,000 rupees. Now tell me, guys, have I absorbed more or less? I have absorbed more. To the extent of how much? To the extent of 1,18,000. The difference between the two. So 25,20,000 minus 24,02,000. How much is this? 1,18,000 over absorbed. The figure alone will not be enough. You need to write under or over. Clear with this, guys? So 1,18,000. Look at this. Under, over. Both they have given just to confuse you. Clear with this, guys, right? So it's going to be how much? It's going to be 1,18,000 over absorbed. So option number A. Are you clear with this, guys? Are you clear with this? Option number A. Fine, guys. Obviously, in this question, they have used the budgeted machine hour as the basis, the blanket rate that is being calculated here. Clear with this, guys. That anyways goes without saying. Let's move on to the next one. What is the supplementary rate for apportionment of under or over absorbed over my WIP, FG, and cost of sales? Now, what's the supplementary rate calculation here? What's the supplementary rate calculation? So, you have under or over absorption here. So, first, what will you need to do? Now, guys, you will be having this. This is your overall under or over absorbed, right? How much is this? 1,18,000. Now, on this entirely, you will use supplementary rate? No. So, first look at the reasons they have given. They have given that 40% is due to defective production. correct, or 40% of this is due to abnormal items, right? So 40% of 1,18,000. So how much is that? That's going to be, second. Yes, that's going to be 47,200 rupees should be taken to my costing P&L, right? Should be taken to my costing P&L. It's abnormal, right? So the balance 60%, how much is this? Only the balance 60% of 70,800 rupees, right, should be treated as a product cost. Correct, guys? Now, this 70,800, if I have to treat it as a product cost, it needs to be apportioned between how many parties? 3 parties. What are the 3 parties here? It is going to be your units sold, units unsold, that is your closing FG, and your WIP. Are you clear with this? These are the 3 parties to whom I need to give a share, right, guys? Now look at this, look at this. Now, what has happened? This is what they are asking for, the supplementary rate. So now the supplementary rate calculation is, on the numerator will be having 70,800. The denominator, what will you have? The sum total of these 3 line items. So what is the sum total of these 3 line items? What is the sum total of these 3 line items? 1,10,000 plus 80,000 plus 90,000, right? Wrong. Guys, be careful here. Be careful here. Look at this. Production, finished goods, 1,10,000, right? Sale, finished goods, 90,000. Means what? I have produced 1,10,000. Out of this, I have sold 90,000 units, which means remaining 20,000 units are remaining unsold. Clear with this? This 1,10,000 is the production. This includes some units sold, some units unsold. Clear with this? Don't add this 90,000 again. This only needs to be segregated. Are you clear with this? So, and of course, this is 80,000, which is 50% complete. The equivalent units is going to be 40,000. Are you clear with this? So now my total equivalent production is going to be how much? 90,000 plus 20,000 plus 40,000. Are you clear with this? How much is that going to be? That's going to be 1,50,000. So now this 70,800 rupees needs to be divided by 1,50,000 units. Are you clear with this? So how much do you get divided by? So 70,800 divided by 1,50,000, you get 0.472. Right, you get 0.472. Look at this, 70,800 divided by 1,50,000, you get 0.472 per unit. This is going to be your supplementary rate. Clear with this, guys? Clear with this, guys? Look, they will be giving, the answers that they will be giving are, the options that they will give you are highly misleading. It will be like very, very close to the correct answer. Clear with this? It will be very close. So they know where you will make a silly mistake. For example, let me tell you one thing. Now, some students, what they would do is, on this 1,18,000, instead of segregating it into your product cost, period cost, directly this 1,80,000 they will do 118,000 divided by 1,50,000 they will do. If you do that, you will get an answer of 0.786. Correct? 0.786 or 0.786666, 0.787. That is also given as an option. They know where you make a mistake. That silly mistake, the answers that you will be getting if you do a silly mistakes are also kept as an option. Watch out. Don't come out of the exam thinking that yes, I've done it right. Be very careful when you are doing it. Clear with this, guys? Have that clarity of thought process. Right, guys? Fine. So that's about this part. So it's going to be how much? It's going to be 0.472 per unit. That's going to be my supplementary rate. And finally, what is the amount of under or over absorbed overheads apportioned to WIP? That's pretty much simple. So now every unit should be given a share of how much? Every unit, each of these 3 components should be given a share of how much? 0.472 per unit. So how do you do it? Look at this. WIP units is how much? Equivalent completed units, 40,000. FG stock is how much? We calculated that was 20,000, and units sold was 90,000, and every unit should be given a share of how much? 0.472. So it's going to be 0.472 into 40,000. If you do 18,800, this is the answer, right? But anyways, they have just presented everything for the sake of understanding, right? So into 20,000 gives you how much? 9440. Into 90,000 gives you how much? 42,480. Overall, if you add up, you will get the total amount of under or over absorption. In this case, it's an over absorption, right? Attributable due to price level changes, normal reasons. The answer here is they have only asked for the share of WIP here. Clear with this, guys? It's going to be 18,880. So it's going to be 18,880. The answer is going to be option number C, and that's about it. Clear with this, guys? So if you notice, the question number 2 and question number 3 of this RTP were pretty much straightforward, right? Concept, highly concept driven, no doubt about it. No doubt about it. Every single thing is concept driven. For those who are mugging up, absolutely nothing can be done. It's only concept driven. That's why I've been telling this right from day one. Question number one, the question itself was tricky, right? The question had a lot of other extra fittings that made the question little tricky. That's about it. Clear with this, guys. So with this, we have finished all the case study based MCQs that are given in our current attempts RTP, right? Now let's move on to the case study based MCQs in our mock test paper number 1. Fine, guys. So now let's move on to our MTP 1 mock test paper series 1, right? For your May 2024 attempt. So the mock test paper series 1 was actually released in March 2024. So now let's get started with the first question, right? So we are doing this case study based MCQs, right? In that the first question. Now this question is regarding process costing, right? Process costing. Now everything, whatever we have seen, exactly they have given, but look at this. The beauty of this question is things have been given like missing figures, right? If you have complete control over process costing, this sum is going to be a cakewalk. No hidden, nothing like a rider in this question and all, but you need to have smartness and presence of mind. That's about it. Let's quickly get started with this. Yes, so Arnav Limited manufactures chemical solutions used in paints and adhesive products. Chemical solutions are produced in different processes. Some of the processes are hazardous and in nature, which may result in fire accidents. At the end of last month, one fire accident occurred in the factory. The fire destroyed some of the paper files containing the records of the process operations for the month. You, being an associate to the chief manager of finance, are assigned to prepare the process accounts for the month during which the fire has occurred. From the documents and files of other sources, the following information could be retrieved. What are the following information? First, some particular process was there, some fire has happened. This is what they have said till now, all this story they have given. Now, what has happened? Opening WAP at the beginning of the month was 500 liters and it was 80% complete with respect to labor, 60% complete with respect to overheads. And the value of opening WAP was how much? 2,78,000. Clear with this, guys. Next, the closing WAP at the end of the month was 100 liters, right? It was 20% complete for labor and 10% complete for overheads. Sir, for material, degree of completion is not given. Wait. Normal loss is 10% of the input that is fresh. Meaning what? Whatever I introduce in that period, on that only the normal loss should be calculated as a percentage. So, which means what? Generally what we take, if nothing is mentioned, we'll take the total on the total input. Total input will mean what? Opening WIP plus units introduced, right? Here they are saying no. Calculate normal loss as 10% of the units introduced. That's all. Clear with this, right? And the total losses during the month were 800 liters, partly due to fire damage. So there were total losses of, actual loss was 800 liters. So 800 liters would be partly normal, partly abnormal. The output transferred to the FG was 3400 liters. Losses have a scrap value of 290 per liter. Right, so every liter that gets scrapped off will be having a scrap value of 20 rupees. All the raw materials are added at the commencement of the process, which means what? Irrespective of whether it's a WAP or completed or whatever it is, with respect to material, all the components are 100% complete. This is the meaning that you can draw from this. Clear with this, guys. The cost per equivalent unit is 660 for the month, made up as follows. Material, equivalent cost of raw material 300, labor 200 and overhead is 160. Now what they have done, in process costing we do 4-step procedure. No, step number 1 is regarding what? Step number 1 is regarding your statement of equivalent units. Step number 2 is regarding your calculation of cost per equivalent unit. Step number 3 is going to be your apportionment of cost. Step number 4 is going to be what? That is going to be a process account. That step 2 they have completely given. The step 2 has been done. That is what? The respective component of cost divided by the equivalent units they themselves have done and they've given this. Are you clear with this? The company uses FIFO method. Obviously, it can only be FIFO method. Why FIFO method only? Because by the facts given in the question itself, we can make out. The reason is basically opening WAP, the value is given in total. In that opening WAP, the breakup of how much is material labor overage, that is not given. So clearly the sum has to be only under FIFO method. We have seen that in our regular classes, right? Then the company uses FIFO to value the WAP and finished goods. The following information are required for managerial decisions. Clear with this, guys, right? So this is what we need to do. Come on, gear up. Let's do this. Let's do this. Fully conceptual. Every single thing we have covered in the lectures, in our in our regular lectures, we have covered every single thing. You just need to now be careful, and we just need to do it. Are you clear with this? Now, no need of steps and all, right? However, the statement of equivalent units, the workings and all need to be done. Definitely it needs to be done. Without it, you can't do this question. Yes, but at least you can, you need not focus so much on the presentation is what I'm telling right now. Let's quickly get started. How much quantity of raw materials got introduced during the month? Wait. Let us first prepare this. Let us first open up a particular ledger, or let us just have an idea as to how this process account is going to look like. Right now, what have they given in this question? The opening WIP, right? The opening WIP was how much? The opening WIP was 500 liters. I'm just talking about the quantity, right? Then what have they given? The closing WIP, right? The closing WIP, how much is that? The closing WIP was 100 liters. It's given here, 100 liters. Very good. Then they have given that the actual losses. Actual loss means what? Normal loss, abnormal loss. Breakup, I don't know. But both put together is my actual loss. That's going to be 800 liters. Fine. And the output transferred to FG, right? That is units completed and transferred. Units completed and transferred. How much is it going to be? They have given that the units completed and transferred were 3,400 liters. Are you clear with this? So basically, of course, this is just a tracker column. It's not equivalent units and all. So now on the output side, totally how much you have? 3,400 plus 100, 3,500 plus 800. So you have a total of how much? You have a total of 4,300 units, right? So now 4,300 you should have. Out of this opening stock, you have 500 units, which means the entire balance. How much is the entire balance? The balance figure is 3,800 liters have been introduced in the current period. Are you clear with this? So what is the answer for number one? It's going to be 3,800. Look, that is what they have also calculated. The balancing figure is going to be the quantity introduced, 3,800. 2 marks. Take it. That's all. Clear with this, guys, right? Look at this. It's going to be what? It's 3,800, right? Yes, the answer is 3,800. Next, how much is the quantity of normal abnormal loss? Very simple. What is the problem here? What is the problem here? So now we know that what is the actual loss? 800 units or 800 liters, correct? So now, yes, the actual loss is 800 liters, right? Needs to be bifurcated into normal loss and abnormal loss. Normal loss is what? 10% of whatever is the units introduced. Units introduced is 3,800. 10% of that is 380, which means whatever is balance, that is because of abnormal loss over and above my expectation, that is going to be 420. So normal loss, abnormal loss breakup, 380, 420, 380 and 420. That's all. So where is 380, 420? Option number A. Done. 2 more marks here. Clear with this, guys. As simple as that. Nothing needs to be worried. Next. Interesting part. Value of raw materials added to the process during the year. They want you to calculate. So here you have calculated and told us how much is the value of, the units introduced and all. So in that, how much is the material component they want us to calculate, right? For this, you need to definitely do your statement of equivalent units. Now, guys, logically think. In this question, we need to use what FIFO method, obviously, correct? So what do you mean by a FIFO method? First in, first out. So whatever came in first, right, would have been used first. So this 3,400 units, what is the breakup? So out of this 3,400 units, 500 units I used from my opening WIP, and the balance 2,900 units were introduced and completed, correct? This is the breakup for this, right? So now with this, we will have to prepare the statement of equivalent units. Input side, just a tracker column, 500, 3,800, the total is 4,300. Output side, just a tracker column. Units completed, how much units got completed? 3,400 units got completed, but the breakup is what? Opening WIP completed is 500 and the units introduced and completed is 2,900. Correct, guys? 500, 2,900. Technically speaking, these two put together is going to be your units completed and transferred. Normal loss, how many units? 380. Abnormal loss, how many units? 420. And units closing WIP is how much? It's given in the question as 100. Add up everything, you should get 4,300. Clear with this, guys? This is just a tracker column. Now what will you have? You have different degrees of completion. Now in this case, you have three different components. What are they? Material, labor, overheads. Material, labor, overheads. So now first opening WIP, right? So they have given that opening WIP, what is the degree of completion in opening WIP? So opening WIP they have given 80% complete with respect to labor, 60% complete with respect to overheads, and obviously materials got fully complete. So this opening WIP is semi-finished product. Remaining how much was completed by consuming the current period cost with respect to material? 0. Why? It was already 100% complete in the previous period itself. So material 0. Labor, they have given it was 80% complete. So the remaining 20% was completed by consuming the current period's material cost. Current period's labor cost. So it's 20% with respect to labor. And how about overheads? 60% complete. So in the current period, you would have consumed 40% of the resources. It is 40%. Clear with this? Multiply respectively, you will get 500 into 20%, 100, 500 to 40%, 200. Clear with this, guys? Next, units introduced and completed. Now only I am beginning from the scratch, and by the end of the period I have also finished it fully. So which means the degree of completion is 100, 100 and 100. So multiply that 100% with 2,900, you get 2,900 each. Clear with this, guys? Normal loss obviously should not be considered. Why? Because in your equivalent production you only considered what? The expected good units. Expected good units means what? Everything except your normal loss units. Correct? We all know all these things, right? The next one, closing WIP. What have they given? The degree of completion. The closing WIP's degree of completion was 20% labor and 10% overheads. With respect to material, it is 100% complete. So 100% with respect to material, right? 20% labor, 10% overheads. Multiply, you will get these figures. So 100 into 100% is 100, 100 into 20% is 20, and 100 into 10% is 10. Then abnormal gains, the degree of completion is not given. Then what will you do? As we have seen, so what we will do is we will assume that the loss was identified only at the end of the process. Put it as 100% complete in all aspects. So it's going to be 420 each. Clear with this? If you add up, you will get your equivalent units for the purpose of each of the components. Are you clear with this, guys? Now in this question, they have given us what? They have given us what is going to be the cost per equivalent, raw material cost per equivalent unit. How much is it? 300. Are you clear with this, guys? Are you clear with this? So now, so how much is going to be my total raw material cost? So here it's going to be 300 into 3420. 300 into 3420 because total equivalent units. So by consuming the current period's material cost, 3420 equivalent units have been produced. So 3420 into 300 gives you how much? 10,26,000. Correct, guys? Correct, guys? Wait. I am sure they would have given this as one of the options. What is it? 10,26,000. Has it been given as one of the options? Okay, they have not given it as an option, luckily. But wait. This is not the final answer. Reason is, now this would have been arrived at after adjusting for scrap income. Correct? That is this is the net raw material costs available for apportionment. So basically this would be raw material cost minus normal loss scrap income is only equal to 10,26,000. Right? So technically speaking, my raw material cost is going to be 10,26,000 plus normal loss scrap income. How much is my normal loss scrap income? How many units were normal loss units? 380 units, correct? 380 units, and every units as in liters, and every liter had a scrap value of how much? Rupees 20. So into rupees 20, so 380 into 20, how much is that? It's going to be 7,600. Are you clear with this? Are you clear with this? So look at this. So it's going to be 10,26,000 plus 7,600. How much is this? How much is this? It's going to be 10,33,600 rupees is going to be my gross raw material cost. Are you clear with this, guys? 10,33,600, and where is it here? 10,33,600. Yes, clear with this. Had I been an examiner, I would have definitely given this as an option because it is very confusing. No. Don't think I'm a sadist and all. I just want you guys to be prepared for this right answer. That's the reason why I'm saying. Clear with this, guys. So it should strike you that this raw material cost that you arrive at, right, would have been adjusted for normal loss scrap income. It needs to be added back because now they're asking me for the gross raw material cost. Next one, guys. What is the next part of the question? What is the value of labor and the value of overheads inside my closing WIP? Very simple. Very simple. So the equivalent cost of labor and overheads, how much is it? So now look at this. So now value of, yes, here. So labor and overheads cost per equivalent labor cost per unit is how much? Labor cost is 200, equivalent overhead cost per unit is how much? 160. Now inside my closing WIP, how many equivalent units are there with respect to labor and overheads? Go to the first part, you will get this. So it's going to be how much? It's going to be 20 and 10 respectively. So take it and multiply. That's all. So it's going to be 20 and 10. So multiply the two, you will get what? 4,000 and 1,600. Clear with this, guys? So what is the value here? 4,000 and 1,600. Are you clear with this, guys? Next, what is the value of output transferred to the finished goods? Now, I think, in my opinion, I think the answer given here is wrong. The answer given here is wrong, right? This option, let us just see, calculate this. Now, what they have done, so what is the value of materials transferred? I mean, the value of output transferred to FG. Technically speaking, how many equivalent units were produced by consuming the current period cost? Right, guys? So how much was that? That is going to be 2,900, right? So here it's going to be 2,900. So 2,900 into, so it has to be, what is the cost for one equivalent output, what is the total cost per equivalent unit? It's going to be 660, correct? So it's going to be 2,900 units or liters into 660 rupees, correct? That is what? That is the cost incurred in respect of units introduced and completed, right? Apart from this, you have opening WIP units, correct, guys? You have opening WIP units, right? So opening WIP units, in the current period, what was the cost you would have incurred? You would have incurred, right, 100 into 300, correct? You would have incurred 100 liters into 300, right? Plus with respect to overheads, 200 liters equivalent units were completed, 200 liters, and each should be given a share of how much? Each should be given a share of 160, right? So this is not 300, I'm sorry. This is going to be, once again, I'll explain it once again. So this is going to be 200. So what happened? So this is the number of units introduced and completed in the current period. How many units were introduced and completed? Units introduced and completed were 2,900 units, right? And for a completed unit, what is the cost? 660 rupees. They have given in the question. So 2,900 into 660, no doubt, right? So apart from this, even this 500 units will be having some cost, correct? What will be the cost? Current period cost will be 100 units into labor cost of 200 and 200 units into overhead cost of 160. So 100 into 200 plus 200 into 160, correct, guys? And apart from that, the entire value of opening WIP should also be considered. How much is that? That is going to be 2,78,000, correct, guys? So this is with respect to 500 liters. Current period cost is this, previous period cost is this. So now if you total this up, how much you get? 2,900 into 660, that is going to be 19,14,000 plus, so here 100 into 200 gives you how much? 20,000. 200 into 160 gives you how much? 32,000, right? So here it's 32,000 plus 20,000. So you get 52,000 here, right? This is nothing but the opening WIP units, right? Now worked on the current period costs, apart from that, plus 2,78,000. 2,78,000. So 52 plus 278,000, right? Plus 19,14,000. If you add up, okay, you get what? 22,44,000. That's right. So fine. The answer is correct, But what they have done, directly they have taken 3400 liters into 660. In this case, coincidentally, it is matching, but no, this is not the case how you do it. In case of your FIFO method, what you do here is, ideally, this is the calculation. This is how the breakup works. How do you do it is, first, so units introduced and completed, 2900 into 660. Opening WIP now completed, right? So you have material cost is 0 because it was entirely done in the previous period itself. With respect to labor and overheads, there is a share of cost. And then opening WIP, that is the previous period cost, 2,78,000 that you directly add. Now you take up all these things, you get a total cost of 22,44,000. Answer is correct. Approach is wrong in this particular solution that they have given. Clear with this, guys? Have this clarity. This is nothing but exactly the same as what we have done. We are not deviating from the approach. Clear with this? We have done this exactly the same way in our regular batch. Please follow it. Clear with this, guys? So that's about this particular. One second. Yes, that's about this. It's going to be 22,44,000, and that's about this particular question as well. Clear with this, guys? Clear with this, right? So with this, we have done this first question. We have completed this first question in our RTP. Look at this. Each and every question carries 2 marks each. Clear with this, guys? Right? Fairly simple, but you need to, this is why I was repeatedly hammering on the conceptual knowledge when it comes to every single chapter. See how it is helping us right now. Clear with this? No hidden agenda. The question was pretty much straightforward. You just required some presence of mind. That's about it. Clear with this, guys, right? Now, let's move on to question number 2. M Limited is producing a single product and may expand into product diversification in the next 1 or 2 years. M Limited is amongst a labor-intensive company where majority of processes are done manually. The employee cost is a major cost element in the total cost of the company, and the company conventionally uses performance parameters, earnings per man shift, EMS, to measure the cost paid to an employee for a shift of 8 hours, and the output per man shift, OMS, to measure the employee's output in a shift of 8 hours. The chief manager of finance of the company has emailed you a few information relating to the last month. The email contains the following data related to the last month. During the last month, the company has produced 234,000 tons of output, and the expenditures of the last month are as under. Now, guys, basically this sum is relating to cost sheet, right? Predominantly, this is regarding, right, preparation of a cost sheet and then certain allied areas as well. Now, let us look at this. Now, they have given so many line items, right? At the time of reading itself, let us properly classify it into the cost sheet. Okay, so the cost sheet is here readily for us. So let us, as and when we read a particular line item, we will classify it. Now, first, what they are saying for this production, raw material consumed was how much? 50 lakhs. So where will it come? Obviously, material consumed 50 lakh. Then power consumed 13,000 kilowatt at the rate of 8 rupees per kilowatt hour to run the machines. So now you can take this as a direct expense, right? So here it is going to be what? Power cost 13,000 kilowatt hour into 8. So that's going to be how much? 104,000. Then diesels consumed 2,000 liters at the rate of 93 per liter to run the power generator used as an alternative backup for power cuts. Yes, that is also a direct expense only. 2,000 liters into 93, it's going to be 1,86,000. Then wages and salaries paid is 6 crore 40 lakhs, right? 6 crore 40 lakhs, one part of your direct material cost. Gratuity and leave encashment paid. This is also pertaining to what? The direct laborers, right? That is the assumption we take. So 64,20,000, that also forms part of your direct labor cost only. 64,20,000. So if you add up the two, you get 7,04,000, 7 crore 4 lakhs and 2,000 as your total material, total labor cost. Then hiring charges of HEMM. Some heavy equipments are there. They are hiring it. The charges are going to be 30 lakhs, and these are directly used in production, right? So now this is what they are saying here. So now what do? Include that as a part of what? Include that as a part of your direct expenses only. Direct hiring charges, direct expenses. Clear with this, guys? Now, hiring charges paid for cars used for official purpose, 66,000. Reimbursement of diesel cost for the cars, 22,000. These two will form part of administration overheads. For official purpose, some cars they are using it. So here it will come down below your cost of goods sold. So your hiring charge is 66 and your reimbursement is going to be 22,000. Clear with this, guys. Next, the hiring of cars attract GST at the rate under RCM at the rate of 5% without credit. In that case, what will happen? It will be your cost. Now, guys, remember this very carefully. Remember this very carefully. So now what they have done here is hiring charges is 66. You can't just hire a car. You need to pay, you need to pay for the diesel also. So you are paying him as a reimbursement. We are calling it as reimbursement, right? So the total is going to be 88,000. Now on this 88,000, this 5% should be applied, not on just 66,000. Sir, why, sir? One more thing you will be having a doubt. Sir, it is a diesel cost and all, right? So diesel GST is not applicable. On diesel GST is not applicable. I know. Right? So this is where I don't want to get very technical into it, but yes, there's something called as, your value of supply, right? Your section 15 of your GST law and all that. Now you need not get too technical into it, but yes, it says that, right, if an invoice is being raised and on that, if there is any reimbursements and all, so the entire, including the reimbursement value, the entire value will be taken as your value of supply. On that only GST will be levied. So fine. So let's not get too technical into it, since this is also an allied cost related to your hiring charges. So on 88,000, you apply a 5%, you get how much? 4,400. That is also now going to be your administration cost. Add it up. Are you clear with this, guys? So it's going to be 92,400 here. Clear with this, guys? That's going to be a total AOH. Next, maintenance cost paid for weighing bridge used for weighing of final goods at the time of the dispatch, 12,000 rupees. This is something related to sales and your distribution. So it's going to be 12,000 rupees is maintenance cost of the weighing bridge, right? Then what do you have? AMC, annual maintenance cost of CCTV installed at the weighing bridge used for weighing your final goods, right? And at the factory premises, 8,000 and 18,000. So the AMC paid for CCTVs at the weighing bridge area, 8,000 rupees. That is going to be a part of your SOH, right? Selling and distribution. And this 18,000 rupees is the CCTV AMC of the CCTV in the production area. That will form part of what? That will form part of your production overheads. That comes here as 18,000. Clear with this, guys, right? Fine. Then TA or DA, your travel allowance, dearness allowance and hotel bill and all being paid for the sales manager, 36,000 SOH. So this clearly comes here, 36,000 comes below here, SOH. Then the company has 1,800 employees who work for 26 days in a month. You are asked to calculate. Right. What is the amount of prime cost incurred during the last month? Now, once you prepare the cost sheet, you will know what is the prime cost, guys. It's going to be 7 crore 87 lakh 10,000. You have this option, 7 crore 87 lakh 10,000. So the first answer is what? Option number D, 2 marks, sorted. Clear with this, guys, right? That's about it, right? This is what has been mentioned here also at the top. The one is D. Next, what have they asked next? What is the total and the per shift cost of production for the last month? Total cost of production, we know it's going to be your, so there are no stocks and all, so the cost of production is going to be your cost of goods sold. So it's going to be how much? It's going to be 7 crore 87 lakh 28,000, no doubt. Now, what is the cost per shift? So man shift, how will you compute? Guys, very simple. They have mentioned that in this company, how many employees are working? 1,800 employees are working. So 1,800 employees are there, right? Each of them work for 8 hours in a shift, correct? Right? Like that, they are working for 26 days. If you multiply all this, you will get the total labor hours worked, correct? Divided by 8. In one shift, there is 8 hours. So totally, how many number of shifts are there? So technically, this 8 and 8 gets cancelled. 1,800 into 26, you get what? 46,800 shifts. Are you clear with this? In one shift, there is what? 8 man hours. Clear with this, guys? So this is man shifts. How many man shifts are there? 46,800. So what you do is take this and divide it by 46,800. Look at this. Right? So now it's going to be what? 7 crore 87 lakh 28,000 divided by 46,800 is going to be 1,682.22. So that is going to be your option number C, correct? Option number C. Clear with this. What is the value of administrative cost incurred during the last month? So what is the value of administrative cost incurred during the last month? So the total administration cost is going to be right? 92,400. Hiring, reimbursement and your GST on that. It's going to be 92,400, right? It's going to be 92,400, right? So that's what has been mentioned here as A. Clear with this? Next guys, right? What is it? What is the value of selling and distribution cost and the total cost of sales? Fairly simple. Now you just have all the entire cost sheet. Selling and distribution cost. How much is your selling and distribution cost? It's going to be 36,000. Cost of sales is going to be 788, 76,400, right? So here, look at this. Okay, so one second guys, I'm sorry. This 36,000 is only the TADA. Even this one is a part of your weighing bridge related cost. I'm sorry, I forgot to add that. So that is also a part of your SOH only. So 20 plus 36, that is going to be how much? 56,000 is your selling and distribution overheads, right? And your total cost of sales, how much is that? So that is going to be 7 crore 88 lakh 76,400, right guys? So that is going to be what? Option number B. And finally, what is the value of EMS and OMS the last month, right? So EMS and OMS calculation, let us quickly do it here. Nothing great, it's fairly simple. Earnings per man shift, what is it? So the total employee benefits, how much was paid? The total employee benefits was 7 crore 4 lakh 20,000, right? So take this up, 7 crore 4 lakh 20,000 divided by the total man shifts 46,800. You get what? Per man shift, what is the earnings? 1504.70. Clear with this guys. Now what is the computation of output per man shift, right? So what is the total output? It's been given in the question as 234,000 tons, right? Divided by the number of man shifts of 46,800. You get how much? 5 tons per man shift. Are you clear with this? So it's going to be 1504.7. That's going to be your EMS, and the OMS is going to be 5 tons. So this is going to be what? Yes, option number A. Are you clear with this guys? So this is going to be option number A. So that is what they have given in this particular question. So that's all about this question guys. Fairly simple, and this has something to do with your cost sheet area. Clear with this guys? And that's about this particular numerical problem, right? Now, let's move on to the next question. So these are all standalone case study based MCQs. Let's quickly finish it off. The wages budget for the last year was based on a standard repair time of 30 minutes per unit, right? And a standard wage rate of 50 rupees per hour. The actual data for the last period are as follows. The number of units actually produced was 30,000. Labor rate variance is 7,500 adverse, and the efficiency variance is nil. From the following information, calculate the actual rate of wages. Now guys, what have they given here? Standard rate is how much? It's going to be 50 rupees per hour. Correct? Standard rate is how much? 50 rupees. Now, what is going to be the standard hours in total? Every unit you are allowed to take 30 minutes, that is 0.5 hours, right? So 0.5 into the number of units, 30,000. So it's going to be the standard hours is going to be 15,000 hours. Clear with this guys, right? Now they have given the rate variance is how much? The rate variance is going to be yes, so the rate variance is going to be 7,500. So now labor rate variance, what is the formula? Standard rate minus actual rate. Now who is the guy responsible? The guy responsible is going to be your HR manager. So he needs to pay for what? The actual hours. Now in this question, do you have the actual hours? No. But can you find the actual hours? Yes. How can you do that? The labor efficiency variance is given as drill. What do you mean by labor efficiency variance? Your standard hours minus actual hours into standard rate is equal to 0. Standard rate is 50, we know. So now standard hours minus actual hours is now 0. Or in other words, in this case, your standard hours is equal to actual hours. That's why you don't have an efficiency variance, right? All these thought process, you can just quickly have it in a fraction of a second. Since I'm explaining it is taking this much time, that's all, right? So now, how much is going to be your actual hours? So standard hours is equal to actual hours. So in this case, so this is equal to minus 7,500. That's the labor rate variance. So do I have the actual hours here? Yes, actual hours is equal to 15,000. Standard rate do I have? Yes, that's going to be 50. Actual rate I need to find out. Clear with this? This is equal to minus 7,500. So now 50 minus actual rate is equal to 7,500. Minus 7,500 divided by 50,000. How much is this? Minus 0.50. right? Or in other words, the actual rate is equal to, this goes the other side, 50 plus 0.5, it's going to be 50.50. That's going to be my actual rate, answer C. That's all, guys. See how beautiful this is, provided you understand the concept of all the standard costing concepts logically and conceptually. You can derive the formula on spot and write it. Clear with this, guys, right? So this is what they have given. The answer is 50.50. I think they have done a mistake. It's not D. I think it was option C, no? Yes, it was option C. However, answer is 50.5 only. Clear with this, guys? Logically, just like how we've been doing in our lectures, just follow it. That's all it is. It will pay off. This is the reason I'm telling you the power of conceptual learning. Now, let's move on to the next one, guys. The following extract is taken from the overhead budget of X. So, if the company is operating at 50% capacity, the overhead is 30 lakhs. 75% capacity, the overhead is going to be 40 lakhs. What would be the budgeted overhead at 60% level of activity level? Simple, very, very simple. This is nothing but your concept of segregation of, the semi-variable costs and all that. That's about this. So, how do you do it? First, is this a fixed cost? No. How do you know it's not a fixed cost? Because it's not constant in total. Is this a variable cost? Let's check it out. So, for 50% output level, so how much is the cost per percentage output level? So, it's going to be 30 lakhs divided by 50. How much is this? 60,000, right? Is the cost per percentage output level. Here, if you see, it's 40,000 divided by 40 lakhs divided by 75. It's going to be 53,333 and so on. So clearly on a per unit level, in this case, 1 unit is 1% output. So it is not this, it is not constant. It neither constant in total, nor is it constant on a per unit level. Hence, it is clearly a clear-cut case of a semi-variable cost. So how would you do this? Segregate and find out the variable component and then fixed component. Variable component, how would you do it? So difference in cost divided by difference in output. Now look at this. This is all you need to do here. The variable overhead for each percentage level of activity level is difference in cost, that is 10 lakhs divided by difference in your output level expressed as percentage. 75 minus 50 is going to be 25%. So how much is this going to be? So it's going to be 10 lakh divided by 25. It's going to be, so 40,000 rupees the variable cost for every 1% output level. Clear with this? How much output level? We don't know. Instead of unit, we keep it as a percentage. That's all. Clear with this, guys, right? So now go and substitute to any one output level. So fixed cost is nothing but your total cost minus variable cost. Let's take this output level. What is the total cost? 30 lakh. From 30 lakh, reduce your variable cost. How much variable cost? 40,000 is for 1% output level. Here for 50% output level, what is going to be your variable cost? So it's going to be 40,000 into 50. It's going to be a total variable cost, right? So 40,000 into 50, that gives you 20 lakhs. So 30 minus 20 is going to be 10 lakh rupees, the fixed cost component. Now you have the variable cost per unit, fixed cost in total. Now they've asked for the overhead cost at 60% output level. How much is that going to be, guys? Very, very simple. It's going to be what? So the fixed component of 10 lakh plus the variable component. How much is this? 40,000 into 60. So 40,000 into 60 is going to be 24 lakhs plus 10 lakhs is going to be 34 lakh. Are you clear with this, guys? That's about this particular question. So now where is the 34 lakh? Is option number B. That's all. 2 marks and you're done. Clear with this, guys? Very simple, normal calculation, nothing great here, right? Next. Which of the following statements relating to zero-based budgeting system is false? So first, it is a method of budgeting whereby all the activities are re-evaluated. So this is correct. Zero-based budgeting attempts to eliminate unnecessary expenditure. This is also correct. It is probably the least time consuming. Absolutely not. Zero-based budgeting, you don't have a base. Every activity needs to be now justified. Clear. It is a heavily time consuming process, right? Least costly. No, it is very expensive. So it is more time consuming and very expensive approach. So this is the only odd one out. It is false. 2 marks. That's all. Clear. If you know what is zero-based budgeting, you can answer this. That's all. Right? Fine. Next. It requires that budgets are built from the scratch. Yes, this is also true. The only false statement is this. Next, 6th. Based on the data below, what is the amount of overhead under or over absorbed? So we need to calculate under or over absorption. Budget overhead is that. Budgeted machine hour. So divide the two, you get your machine hour rate. How much is that? 525,000 divided by 17,500. Overhead rate is how much? 30 rupees per hour. Actual machine hours is how much? Into 17,040. So now multiply this. So the absorbed overheads is going to be how much? 30 rupees per hour into the actual hours of 17,040. It gives you 5,11,200. What are the actual overheads? 5,20,000. So now how much is the difference? The difference is going to be 8,800. Now be very clear. Under or over? my absorbed amount is less than the actual amount. It is under absorption of 8,800. So the option is B. That's all. 2 more marks. Guys, see how simple this is. The standalone MCQ are very easy. Clear with this. Clear with this. Look at this. This is what they have also mentioned here. The option is B. 8,800 under absorbed. Next. Another 2 mark question. A customer has been ordering 80,000 caps during the year. It is estimated that it costs ₹1 as inventory holding cost per cap per month. Be very clear, right? And that the setup cost per run of cap manufacture is 3,500. Optimum run size, EBQ they have asked. EBQ formula is what? Root of 2DS by C, where D stands for the annual demand of the product. Now I am having one customer who is having a demand of 80,000. So in a year, correct? So D is going to be 80,000, right? S is the setup cost, that's going to be 3,500, and C is going to be the carrying cost per unit per annum, 1 into 12, it's going to be 12. So square root of 2 into 80,000 into 3,500 divided by 12. So 2 into 80,000 into 3,500 divided by 12, square root, you get what? 6832. Are you clear with this? 6832 is what? That is going to be the run size. So optimum run size is going to be what? That is going to be 6832. Yes. Okay. So I think the question itself is wrong here. They have asked what is the optimum run size. They have given it in terms of runs, which means technically in this question they are asking you for the number of runs. Clear. So how do you calculate the number of runs? So in one particular batch, I am planning to produce how many units? I'm planning to produce 6832 units. In a year, I need to produce how much? 80,000 units. Right? 80,000 units divided by 6832. How many runs or how many number of batches are required? 11.70 batches rounded off to 12. Clear with this? Strictly speaking, you should not round off. I have told you. But yes, since they have given this as as an MCQ, you just round it off and you just answer it like that. Don't question back the question. Clear with this, guys? So here the answer is going to be option number A, 12 runs. Clear with this, guys? That's all. 30 marks of your entire case study based MCQs is sorted. Clear with this, guys? That is all about this. Clear? This process costing sum was also very interesting, but much beyond that, the question number 1 of RTP relating to that material cost chapter with that the perishable item and all, that was at its peak. That I would rate that sum as number 1 in terms of the complexities, the tricks involved there. Clear with this, guys, right? So with this we are done with MTP number 1, right? Now guys, let's move on to the second mock test paper, right? So now in that, let's go on, read the first question. A meeting of the heads of departments of Arnav Limited has been called to review the operating performance of the company in the last financial year. The head of the production department appraised that during the last year, the company could operate at 70% capacity level, but in the coming financial year, 95% capacity level can be achieved if an additional amount of 100 crore on CapEx, capital expenditure and working capital is incurred. The head of finance department has presented that during the last financial year, the company had a PV ratio of 40%, the margin of safety and the break-even points were 50 crore and 200 crores respectively. So in the last year, the margin of safety was how much? 50 crore rupees. Break-even point was how much? 200 crore rupees. Clearly, what is the total sale? Just by look at it, you can say it's going to be how much? 50 plus 200. In the last year, the total sales was 250 CR, 250 crores. Clear with this, guys, right? The PV ratio of the last year has also been given. To the reply to the proposal of increasing the production capacity level to 95%, the head of the finance department has informed that this could be achieved if the selling price and the variable cost are reduced by 8% and 5% of sales respectively. Now the word here is this. Even the variable cost is reduced by 5% of sale. Are you clear with this? Not as compared to the previous year's variable cost, we are reducing by 5%. No. Here they are saying the variable cost ratio is being reduced by 5%. That's what they are saying. Very important understanding, right? Next. The fixed cost will also increase by 200 crore due to increased depreciation. Sorry, the fixed cost will also increase by 20 crore due to increased depreciation and additional assets. So they are saying the next year, right? If you do all these things, right, the expansion and all, So for you to achieve this expansion in the next year, what they are saying is the selling price should be reduced by 8%, the VC ratio should be reduced by 5%, the fixed cost will be increased by 20%. One more thing they are saying, the additional capital will be arranged at the cost of 15% per annum from the bank, and in the coming financial year it has been aimed to achieve additional profit of 10 crores over and above the last year's profit after adjusting the interest cost on additional capital. Are you clear with this? So what was the additional capital? 100 crores. What is the cost on that? 15% on 100 crores is going to be 50 crores. They are saying after recovering this 15 crores also along with all other fixed costs, the company wants to report a profit of 10 crore more than what it reported in the previous year. Clear with this, guys? Hence, for the purpose of this particular question, this cost, the interest cost, which we generally don't take as a cost here in costing, right? But we need to consider that because they are saying over and above, after recovering this interest component also, the company wants to make a profit of 10 crore more than what it made in the previous year. Clear with this, guys? Have the questions right. Now, the following points is required to be calculated on urgent basis. To put the same in the meeting, you being an assistant of the head of finance has been asked the following questions. Number one, what will be the revised sales for the coming financial year? What will be the revised break-even point, revised margin of safety for the coming year, the profit of last year and for the coming year, then the total cost of the last year and for the coming year, right? 5 questions, each carrying 2 marks, 10 marks as a whole. Now they are beautifully playing around with this. Now let's see what needs to be done. Now guys, first, now look at this. Let us look at the present sales level. What has happened? They have told us, they have mentioned that look, presently, that is in the previous year, the company has a margin of safety of how much? Sorry, a PV ratio of how much? 40%, right? Now, what they have mentioned is the break-even point was how much? 200 crores. So, presently, what is the fixed cost? So, presently the fixed cost is, so break-even point into PV ratio, correct? So, 200 crores into 40%. So, how much is that? That's going to be 80 crores, correct, guys? So, 80 crores is presently my fixed cost. Correct. Now look at this. So what will be the total sales presently? Break-even sales plus margin of safety. By looking at the question itself, we saw this was the present sales. Correct. So it's going to be 250 crores. PV ratio is 40%. So what is the variable cost here? Variable cost is going to be 60% of sales. 250 crores into 60 lakhs. So the total variable cost is 150 crores. What is the total fixed cost? We just calculated. So that is nothing but break-even sales into your PV ratio. That gives you 80 crores. Are you clear with this? Right. So what is going to be the total cost here? So if you want to calculate the total cost, variable cost plus fixed cost, 150 plus 80, it's going to be 230 crores. Right. And what's going to be your overall profit? Your profit is going to be sales minus total cost. Or in other words, if you want, you can say sales minus variable cost gives you contribution minus fixed cost gives you profit. Correct, guys? So now what has happened presently? The sales is 250 crores. Variable cost, we just calculated it as 150 crores. Get a contribution of 100 minus a fixed cost of 80 crores results in a profit of 20 crores. In the present year, what is the profit? The previous year, what is the profit? 20 crores. Are you clear with this? In the next year, how much they want to earn profit? They want to earn a final profit of 10 crore more than what they earned in the previous year. So in the next year, the required profit is 30 crores. I think in one of the questions they had asked this. The profit for the last year and the coming year, very simple. Last year is 20 crores. Next year is 30 crores. That's all. One basic level calculation, 2 mark is over for you. Clear with this, guys? Take this 2 marks. Are you clear with this? Very simple. Do not confuse. Have clarity in your mind. Clear with this. Next. Now, fine. Based on all these things, we need to calculate for the next year what is going to be the revised figures. Now, revised sales, we need to calculate. Now, look at this, guys. Presently, what is the fixed cost? 80 crores. Now, read the question. They have said in the next year, after all these changes, my fixed cost is going to be increased by how much? 20 crores. Correct? So, add 120 crores. Over and above, they are saying now I want to make a profit of 10 crores after recovering my interest also. How much is my interest? 100 crore rupees funding into 15%, that's going to be 15 crores. So for the next year, the revised fixed cost to be now recovered is going to be 115 crores. Are you clear with this? The fixed cost to be now recovered is 115 crores. Fine. Now, not just that, they have also mentioned a few more things. What is it? In the next year, there will be changes. Selling price will have to be reduced by 8%. The VC ratio will have to be reduced by 5%. They have given this is not variable cost. It is ideally variable cost should be reduced by 5% of sales they have given. It means VC ratio needs to be reduced by 5%. Are you clear with this? So now, how would you do this? How would you do this? Right? We need to calculate the revised PV ratio. Now, for this, let us keep something as the base. Now, let us say selling price, variable cost, contribution. Okay. Now, guys, please hear me out. Presently, let us say the selling price is 100. Okay. Right. Now, what is the current PV ratio we got? The present PV ratio is 40%, which means your contribution per unit is 40, which means variable cost will be 60. This is what? This is the present data that we have. Correct? Now, in the next year, new data, what will happen? They are saying that the selling price should be reduced by 8%. Instead of 100, it needs to be now how much? 92. Correct? Then the variable cost should be reduced by 5% of sales. What is the meaning of that? Presently, what is the VC ratio? Presently, the VC ratio is 60%. They are saying the revised VC ratio should be how much is going to become 55%. It has to be 5% less. So it needs to be 55% of my sales. So now tell me, in the next year, what is going to be my variable cost per unit? If I do that, it's going to be 55% on 92. Are you clear with this? Here they are talking about change in the VC ratio, not the variable cost per unit. So it's going to be 0.55, right, into 92. How much is this, guys? That is going to be 50.60. Are you clear with this? So what is going to be my revised contribution? It is going to be 92 minus 50.60. It is going to be how much? 41.40. I think this is what they have given here. Yes, look at this. Clear. So you need to understand this is nothing but they are actually expecting a 5% reduction in the VC ratio, not the variable cost as such. Clear with this, guys, right? Very important understanding. Very important understanding. It now becomes how much? 41.40. Right now, in the next year, what is going to be my PV ratio now? 41.4 divided by 92. Are you clear with this? How much is this? It is going to be exactly 45% is going to be the PVR. See, we did all these calculations for calculating the PVR only. Here the per unit data is not given, but we are doing this to calculate what the PV ratio only. Are you clear with this? Here we are not mentioning anything in units. Everything is mentioned only in values. So the next year revised new PVR is going to be 45%. Very important understanding here. You need to read between the lines. The question has been worded slightly different. The one word that actually can make or break this question is this: 5% of sale. Your variable cost is reduced by 5% of sale, which means what? They are not talking about variable cost. They are talking about variable cost ratio. You need to have this smartness. Clear with this, guys? Clear with this, guys? Right? I've seen many people. In fact, some even in some YouTube channels, they slightly made a mistake here. Clear with this. So please be very clear about this. This is a fall in VC ratio, though it is not being mentioned as such. Clear with this, guys? Have the conceptual clarity here. Right, guys? Fine. This is what it is. This is what it is. Right. Now with all these things, now we are prepared. Now let us go up and find out what is the first question they are asking us. What will be the revised sales for the upcoming year? Now, very simple. What should be the revised sales? So can I say I have the PV ratio with me? The revised sale will be, so I know that in the next year I need to recover so much amount of fixed cost. Over and above that, I need to make so much amount of profit. Correct? So basically, how much will be the contribution required? The revised fixed cost plus the revised profit. Right? If you add them, that is going to be the required contribution divided by PV ratio. Now look at this. In the next year, what is the revised fixed cost? We just saw the revised fixed cost was 115 crores. Correct? So 115 crores, this is the revised fixed cost. I need to recover this. And what is the expected profit? So in the last year I made a profit of 20 crores. This year I'm going to make a profit. I want to make a profit of 10 crores more as compared to the previous year. So the expected profit of this year is going to be 30 crores. Right? So 115 plus 30, the whole divided by 45%. How much is that? 322.22 crores. Very simple, guys. That's about this. So this is option number A. Next, option number B. Calculate the revised break-even point. What is the big deal? It is going to be the revised fixed cost divided by PV ratio. So it's going to be 115 divided by 0.45. So one second, 115 divided by 0.45. So I think it's going to be, yes, 255.55555. So it's going to be 255.56. It's D. Are you clear with this? Are you clear with this? Second, yes, yes. That is what it is, right? Option number D. Next, guys, what have they asked? Revise the margin of safety. What is the big deal here? So the revised sales minus revised margin of safety. So it is 322 minus 255.56. How much is that? 322.22222 minus 255.55555. That's going to be how much? 66.666666. Are you clear with this? Yes, as simple as that, guys. As simple as that. That is all it is. Just one conceptual clarity and you are through with this entire question, right? And then the profit for the last year and the coming year, we know last year is 20, this year 10 crores more than the last year. Are you clear with this? That's about it. Next, what is going to be the total cost for the last year and for the coming year? Find the total cost for the last year. We have already calculated that. The total cost for the last year is 150 plus 80. Correct. It's going to be 230 crores. Correct, guys? Yes, fine. Now, in this year, how much is it going to be? Right? Very simple, very simple. Again, it's going to be variable cost plus fixed cost. That is going to be my total cost. Guys, yes, this year, what is going to be my variable cost? First, PV ratio is 45%, which means the VC ratio is 55%, right? And this year, what is going to be the total sales? This year, the total sales is going to be 322.22, right? So the variable cost is going to be 322.222 into 55%. This gives me the total variable cost plus what is the revised fixed cost? 115 crores. Are you clear with this? So basically, how much do you get? So it's 322.2222 into 0.55. That gives it 177.2222 plus 115. That gives you a total of 292.22 crores. Are you clear with this? So it's going to be 292.22 crores in the present year. And in the last year, it was how much? It was 230 crores as we found it. So here, it's going to be option number A. Clear with this, guys? That's about this question. 10 marks. 10 marks. That's about it, right? And remember, the key here is what? What they have asked for here is actually a fall in VC ratio, not a fall in variable cost as such. That understanding is very much required, guys. Fine. Clear with this, guys? Clear with this, right? So with this, let's move on to the next question, which is question number 2. Now, let's get started with question number 2. K Limited is a manufacturer of a single product A. 8,000 units of product A has been produced in the month of March 2024. At the beginning of the year, a total of 120,000 units of product A has been planned for production. So, in this month, 8,000 units were produced, and at the beginning of the year, they had originally planned to produce how many units? 120,000 units, right? The cost department has provided the following estimates of overheads. Fixed is 12 lakh, variable is 6 lakh, and semi-variable is 1,80,000. Semi-variable they have given here. So semi-variable charges are considered to include 60% of fixed nature, 40% of variable nature. Clear with this? This is for the year that they had budgeted for. Now, the records of the production department shows that the company could have operated for 20 days, but there was a festival holiday during the month. So what they had originally planned was to work for 20 days in the month of March, but one day turned out to be a holiday. So actual number of days worked was only 19 days in a month. Clearly, this is an indication that the question is regarding, there will be one question regarding calendar variance. We can see this is a standard costing sum, by the way, right? So now the actual cost data for the month of March 2024 are given below. Fixed, variable, semi-variable, right? Again, semi-variable is what? 60% fixed and 40% variable, right? Then The cost department of the company is now preparing a cost variance report for the managerial information and action. You, being an accounts officer of the company, are asked to calculate the following information for preparation of the variance report. Now, what is the variable overhead cost variance for the month? Fixed overhead volume variance, fixed overhead expenditure variance, then fixed overhead calendar variance, fixed overhead cost variance for the month. So, predominantly they are asking for variable overhead and fixed overhead cost variances. Only one part is regarding variable or cost variance. The others are all components of fixed overhead variances. Now, guys, how do you do it? First, what do you need to do? There is some fixed variable, semi-variable. This semi-variable, you branch it into fixed and variable and give the share respectively to fixed and variable. Clear with this, guys? Remember one thing, the budgeted data is for 1 year, whereas the actual data is for 1 month. Have that in your mind first. Now, based on this, let us do it. I've just made a calculation here. Now, tell me, guys, so annually, what was budgeted? What was the budgeted fixed cost here? They had budgeted a fixed cost of 12 lakh rupees, right? 12 lakh rupees they had budgeted. Over and above this, so 60% of this 1,80,000 into 0.6, that's going to be 1,08,000 was also planned to be what? Your fixed cost. So your total fixed cost was budgeted fixed cost was how much? 13,08,000. What was the budgeted variable cost for the year? 6 lakhs plus 40% of 180,000. So 180,000 into 0.4 gives you 72,000. So 6 lakh plus 72,000. 6,72,000 is my budgeted variable overheads. Clear with this, guys? Now, in this question, first what they had asked for with respect to variable overheads, they had just asked for variable overhead cost variance. So tell me, guys, so what is the variable overhead cost planned per unit? It's going to be 6,72,000 divided by how much? Divided by 1,20,000. 672,000 divided by 120,000. So it's going to be 5.6 rupees per unit. Are you clear with this? Now, variable overhead cost variance is what? Standard variable overheads. Logically think. In this case, hours and all is not given. Logically think. Standard variable overhead cost, right? Minus actual variable overheads. Correct, guys? Now, what is a standard variable overheads? Per unit, you are allowed to incur 5.6 rupees. In this month, you have actually produced 8,000 units. 5.6 into 8,000. How much is it? 44,800 rupees is going to be your variable cost to be incurred for the actual production. Clear with this? What is the actual variable overheads? What is the actual variable overheads? Now, the actual data, let us segregate. The actual data are also given here below. So, actual fixed overheads, how much is it? 1,19,000 plus 60% of 19,200. 19,200 into 0.6, that's going to be 11,520. So, actual fixed overheads incurred for the month is 1,19,000 plus 11,520. It's going to be 1,30,520. Similarly, actual variable cost incurred is how much? 48,000 plus 40% of 19,200, which is 7,680. So it's going to be 55,680. Clear with this, guys? Now we have the budgeted and the actual cost data with us. Now let's get started. Variable overhead cost variance. So tell me, guys, variable overhead cost variance, how much is it? Variable overhead, standard variable overheads, how much is this? 5.6 in per unit you are allowed to incur. You have actually produced 8,000 units, so it's going to be 44,800 is the standard variable overheads. What is the actual variable overheads incurred? The actual variable overheads incurred is going to be how much? 55,680. Are you clear with this? So here it's going to be how much? 55,680. So now what has happened here? My actual is more than the standard. It is clearly an adverse variance to the extent of 10,880. So the first answer is option number 8. Option number D, is it? Yes, option number D, 10,880 adverse. Now they are asking about variable overhead variances and all. Now guys, logically think and answer. Logically think and answer. Now, fixed overhead cost variance, right? So fixed overhead cost variance, how will you calculate? It is nothing but absorbed fixed overheads minus actual fixed overheads. Correct, guys? Absorbed fixed overheads. How much is it? Forget all the formulas. Logically think. This is the reason why I have been telling you learn the subject conceptually. See, for those students who mugged up standard costing, I'm sorry, this 10 marks is gone. That's all. No, you can't even do anything because this entire sum is concept driven. This is concept driven. By the way, here, this is the reason why I actually interlinked the concept of absorption costing, that is overheads chapter, with this area, fixed overhead cost variances, because that's the way to learn this. Clear with this, guys? Look at this. In this sum, hours are not used. Everything needs to be logically done. Now, what's your absorbed overheads? So we know that the budgeted fixed overheads was how much? 13,08,000. And the budgeted output was how much? 1,20,000. So what is the predetermined rate, absorption rate? If they are following a production units method, it's going to be 13,08,000 divided by 1,20,000. So per unit, the absorption rate is how much? 10.90. Right? In this month, I've actually produced how many units? 8,000 units. Absorbed overheads is 10.90 into 8,000 units. Correct, guys? Minus, in this month, what was the actual fixed overheads incurred? It was 1,30,520. 1,30,520. Are you clear with this? So 10.9 into 8,000. So absorbed was 87,200. Actual was 130,520. So now how much is this, guys? It's going to be 130,520. It's going to be 43,320 here. This is going to be an adverse variance. Are you clear with this, guys? This is nothing but, what is it? Under absorbed. Clear with this, guys? Clear with this? 1 second. I think there's some issue here. 1 second. Have I taken the right figure? 1 second. Okay, I'm so sorry. So this is, they had asked for fixed overhead volume variance here. Okay, guys, okay, by the way, anyways, I think they had also asked for, okay, fixed overheads cost variance is part number 5. So that we have got the answer right now. It is 43,320 adverse, right? So this is what we have got here, 43,320 adverse. Are you clear with this? Option A is the answer. Okay, first we did the fixed overheads cost variance. The answer is correct, but it is pertaining to a different part. Clear with this? Absorbed overheads was how much? 87,200. Actual overhead was how much? 1,30,520. Clear with this, guys? Now, this fixed overhead cost variance, so now it gets branched into two. Logically, you just keep doing it logically as I've taught you. Just keep doing it logically. So now this gets branched into two. What and what? Fixed overhead expenditure variance and fixed overheads volume variance, right? Expenditure variance, what is it? It's going to be budgeted fixed overheads minus what? Minus actual fixed overheads. Clear with this? And here it's going to be the balancing figure. What is it? Here it's going to be absorbed fixed overheads minus budgeted fixed overheads, right? Now, guys, tell me, how much is budgeted fixed overheads? I had budgeted a fixed overhead of how much? 13,08,000. Wait, that is for 1 year. We are talking about 1 month. So 13,08,000 divided by 12. 1 month, the budgeted fixed overheads is how much? 1,09,000. Are you clear with this? It's going to be 1,09,000 minus, what is the actual fixed overheads? 130,520. Are you clear with this? Similarly, here the fixed overheads volume variance, how much is it? Absorbed overheads is 87,200 minus budgeted overheads is 1,09,000. Are you clear with this, guys? So tell me here the expenditure variance, how much is it? 1,09,000 minus 130,520. It's going to be 21,520 adverse. And here it's going to be 87,200 minus 109,000. It's going to be 21,800 adverse. Are you clear with this? Now we have done everything. Let us go and see what they have asked for here. So they have asked for fixed overhead cost variance. That is point number 5. Okay. Number 2, fixed overheads volume variance. Volume variance, how much is it? 21,800. So the answer is 21,800 adverse. So 2, the answer is C. Let us check it once. So for part 2, the answer is correct. The answer is C. Are you clear with this? Then, guys, what have they asked for? Fixed overheads expenditure variance. How much is expenditure variance? We just calculated expenditure variance. 21,520. Is it correct? Let's go and verify it once. Yes, 21,520. Yes, so it's going to be 21,520. Adverse, option number A. Are you clear with this? That's all, guys. See how much we have done easily. And calendar variance, right? Apart from this, they have also asked for You know, this fixed overheads cost variance is also done. Calendar variance. What is calendar variance? Possible fixed overheads minus budgeted fixed overheads, right? So budgeted fixed overheads is how much? 1,09,000. What is possible fixed overheads? It is going to be, so your 1,09,000. If this was for a budgeted period of 20 days, how much is it for the actual period of 19 days? 109,000 divided by 20 into 19. How much is this? 103,550. Are you clear with this? So the possible fixed overheads was 103,550. Your budgeted fixed overheads is 1,09,000. So now what's the difference between the two? So the difference between the two is going to be 5,450 adverse. Are you clear with this? 5,450 adverse. So the answer is option number B. The answer is option number B. That's about it, guys. Right? Do not confuse. It's so very easy. It's so very easy. Have the confidence and you're halfway through. Clear with this, guys. This is all it is. This is all it is. Now can you understand the power of conceptual learning? Right? One common question in that they had asked all these things. Now the best part is you don't even need to focus on the presentation. You just need to focus on getting the right answers, plugging the figures and arriving at it. All these workings can be done in rough. They are not asking you for a presentation. Clear with this, guys. Just 5 questions. You're getting 5 into 2, 10 marks. That's about this. And here, only and only if you have studied it conceptually, you can crack this. Right? For students who have mugged up the formulas of standard costing, absolutely it is not at all possible. This is the reason why I'm saying, you know, your conceptual learning is the only way forward. Right? That's the smartest way to crack exam. Clear with this, guys. Fine. So with this, we are done with this question. Let's move out for the next one. Now let me read out the question. Question number 3. If the amount of wages under Halsey plan is 420, time allowed is 8 hours and the guaranteed time rate is 60 hours, what is the total time saved by the worker? So now under the Halsey plan, this is direct, guys. So what will be the payment? How will they pay? It's going to be total time taken, right, into the time rate, which is 60, plus he'll be paid a bonus. How will they calculate the bonus? The bonus is going to be 50% of time saved. Time saved is what? So it is basically time allowed minus time taken. 8 minus time taken, right, into the time rate again of 60 rupees. This is equal to 420. Are you clear with this? So the basic wages, whatever time taken into 60 plus 50% of the time saved into time rate. So total put together is going to be 420. So now how will you calculate this? 60 TT plus, so 60 into 0.5 is going to be 30. So 30 into 8 is 240. Sorry. Yeah, so it's going to be 240. Right? 240 minus 30 TT. Correct? This is equal to 420. Now it's just a matter of solving the equation, guys. So how did I do it? How did I get this 240? 60 into 50%, how much is it? 30. 30 into 8 is going to be 240. Similarly, 30 into minus TT is going to be minus 30 TT. Correct? Fine. So it's going to be 30 TT is equal to, so 420 minus 240, that's going to be give me 180. So the time taken is going to be 180 divided by 30, which is going to be 6. Correct? They have not asked for the time taken. They have asked for time saved. Time allowed is 8. Time taken is 6. How much was the time saved? It's going to be 2. Are you clear with this? So the answer here is 2 hours. Right? 2 hours. The option A is the right answer. Clear with this, guys? That's all. 2 marks in your pocket. That's about it. Next. Let's move on to the next one. From the following information, calculate the total cost of product A and product B using ABC analysis. So product A, 5,000 units. Product B, again 5,000 units. Total number of purchase orders placed 102 to 100 to 20. So the total orders is going to be 320. Number of deliveries received 70 and 200. The total is going to be 270. So ordering cost total is 4 lakh. Delivery cost total is 1,35,000. So now, guys, it's a very direct sum. It's basically an ABC. So what do you do here? So each of the two activity cost pools need to be apportioned using the respective cost drivers. So here it's going to be 4 lakh divided by 320. I will arrive at the cost driver rate, multiply it respectively with 100 and 220. Here 1,35,000 divided by 270. I'll arrive at the cost driver rate, multiply it 70 and 200 respectively. Let's quickly do this. So the ordering cost is going to be 4 lakh divided by 320. So ordering cost per order is 1250. Similarly, delivery cost is 1,35,000 divided by 270. 135,000 divided by 270, you get 500, right? So now product A, what will happen? So product A, So how many number of purchase orders for product A? 100, and deliveries is going to be 70, right? So 100 into the cost driver rate here, it's going to be 1250 plus yes, 70 into 500. I get a total share of 1,60,000. Similarly here for product B, so 220 orders into 1250 plus 200 deliveries into 500 rupees per delivery, you get 3,75,000 rupees. Are you clear with this? So here it is going to be option C, 1,60,000 and 3,75,000. Direct sums, guys. Nothing great here. These are all some direct questions. Clear with this, guys. Now let's move on to the next one. What would be the prime cost from the below information? Direct material purchase, labor cost, expenses, direct expenses, manufacturing overheads, direct material consumed. Look, exactly, this is exactly what I told you at the beginning of our lectures, regular batch itself. Back then, all this MTP, RTP had not come. I told you often students confuse between material purchased and material consumed. When what hits the cost sheet, what is a cost with respect to material? Only direct materials consumed. In this case, this needs to be ignored. So my prime cost component would be direct material consumed plus labor plus expenses. Are you clear with this? That is all it is. Look at this. Direct labor 45,000, direct expense 15,000, direct materials consumed 67,500. Purchase is not even relevant. I can purchase and keep anything as my stock. That is not relevant. What I consume alone hits my cost sheet. Clear with this, guys? Right? So it's going to be 67,500. I add it up. It's going to be 1,27,500. So the answer is going to be option number B. Clear with this, guys? Next. A product passes through process 1. Input raw material issued were 8,000 units. The normal loss anticipated is 10% of the input to the realizable value of 5 per unit. 7,600 units of output were produced and transferred to the next process. If the total cost incurred in process 1 was 4 rupees, then the amount of abnormal gain or loss is how much, right? So how would you do this? First, so they were expecting a loss of how much? They were expecting a loss of 10% on input, which is 700. Sorry, 8,000 into 10%. 800 was the loss expected. Now, what is the actual loss? They inputted 8,000. They got an effective output of how much? 7,600, which means the actual loss is how much? It was only 400 units, right? Let's bifurcate this into normal and abnormal. Normal loss, how much did I anticipate? 10% of 8,000. I was expecting 800 units of losses. But what has happened is, it turned out that only 400 units got lost, which means it is a clear-cut case of abnormal gain to the extent of how much? 400 units. Are you clear with this, guys? Right? Now, each of these abnormal gain units, how will you value? Expected good units, how are they valued? Using our regular formula. What is this? Total cost minus normal loss scrap income divided by, so it's going to be input minus normal loss units. Correct? Input minus normal loss units. Here, what is the total cost? The total cost was 40,000, right? So the cost per unit formula is this, right? We've seen this treatment of losses fully. We've seen it, right? So here it's going to be 40,000 minus was the normal loss scrap income. The normal loss scrap income is going to be, so here it's going to be 5 rupees per unit, right? So now what was the total number of normal loss units? 800 units. So from this I will reduce 800 into 5. Are you clear with this? So 800 into 5, how much is that going to be? 4,000. So the net expected cost is 40 minus 4. It's only going to be 36,000 divided by what is the expected good units? What did I expect? 8,000 units I inputted, and I expected to lose how many units? I expected to lose 10% of that. That is going to be 800 units. Are you clear with this, guys? So how much is this going to be? 36,000 divided by 7,200. How much is that? 36,000 divided by 7,200. So now the cost per unit, every unit should be valued at 5 rupees. Now how many abnormal gain units are there? 400 units. So 400 into 5, how much is that going to be? 2,000 rupees. So the abnormal gain should be valued at how much? 2,000 rupees. Are you clear with this? This is what they had also given. Clear with this, guys? All these things we have already seen in our lectures, in our regular lectures. Nothing new is there. Clear with this? Have the confidence. Now let's move on to the last question here. Find out the most appropriate unit cost, right, from the following information of ZMD Transportation Services Limited dealing in goods carriage. They are dealing in goods carriage. Total cost is 5,25,000. So what would be the appropriate service cost unit? Kilometers traveled, ton carries, number of drivers, number of trucks, ton kilometers, right? Composite cost object. So I would pick this. Anyone would pick this as the best, I mean, the service cost unit, the composite service cost unit. So now what is going to be the cost per cost unit is going to be 5,25,000 divided by what? Divided by 6,55,000. Are you clear with this? How much is this? It is going to be 0.80152 and it just keeps on going. Clear with this, guys? So the answer is going to be B. Are you clear with this? As simple as that. It's going to be what? 5,25,000 divided by 6,55,000 ton kilometers. Clear with this, guys? You get an answer of 0.8 per ton kilometer. Right, guys? Fine. And that is all about the entire your case study based MCQs from all the three sources. So from all the three sources, which is basically your RTP, your MTP1 and your MTP2, an extensive coverage has been done. Right now, guys, have the full confidence. You guys will make it. Do not worry about it. Right? So have the confidence, and this is actually the only base that we have to prepare ourselves for your MCQs, case study based MCQs for this May 2024 exam, because as on date, even in the institute study material, case study based MCQs are not there. Right? So whatever MCQs are there, we've already covered. Now that our MTPs and RTPs had some quality questions, I wanted to discuss this before your exam, so that in your exam, even if one or two question comes in, some about 5 to 10 marks, if it gets repeated or if it gets taken from here, that's going to be a huge bonus for us. Clear with this, guys? Fine. So that's it from my side for today, guys. So I will see you all in the next one. Thank you all so much and all the very best for your exams. Bye-bye.